There we go. So, yo, what is up for everyone watching this on the YouTube replay? I hope you're having a phenomenal day. And for y'all on the YouTube replay, we're going to just get straight into the two new stocks that I think are very attractive. I just put them on the top of my watch list to potentially buy the dip on next week. I hope they dip. Like, I would own both of these companies right now if they were on a dip. So, let me share with you the two new stocks that I have found very fascinating that they're at the top of my watch list. And then after this, I'll give you a stock portfolio update because I haven't streamed in the past week, and I'll share with you how our portfolio did. So this first stock here is a very interesting one, and they traded a pretty fair valuation, a 28 forward PE. This is actually the company that now owns Mattress Firm. So this is your money laundering play. Well, I don't know, but they have phenomenal fundamentals. Basically, the people who are Mattress Firm franchises pay rent and royalties back to the parent company, and they just got acquired by this publicly traded company, and they're upping their royalty and franchise fees. So if anything, the Mattress Firm customers are the ones that are going to be able to afford it. And then they own some other companies like Tempur, Sealy, North America, some like mattress company. But yeah, so here's the acquisition. If we go to their cash from investing activities, this is the quarter they acquired Mattress Firm. It was actually, they bought them for $5 billion. And ever since the numbers, they've been really growthy. The sales are up 63%, 52%. So that's what I love. The fact that this company just acquired Mattress Firm. And again, the reason, if we go to their net income, it says they lost $32 million net income this quarter, Q1. Again, Q1 is when they acquired Mattress Firm. This was all related to the acquisition fees. So their EPS is going to normalize. Obviously, that was a one-time adjustment. So when we do kind of a forward multiple on this is why I think this stock might just continue to climb higher. The forward PE is a 28. I mean, I'm looking to buy this one. They seem interesting. I think they pay a dividend as well, or 0.63% dividend, not too shabby. So, yeah, that's the first stock. I'm going to make a YouTube video soon digging into their investor presentation, but now, this next stock I want to share with you is very fascinating to me. This is Cavco Industries. I've been doing so much research on this company, looking at their investor presentations. They make these manufactured homes. They have a phenomenal balance sheet, literally no debt at all. But they're just really growthy right now. Their diluted normalized EPS, or the metric you really want to look at, their EPS is just massive growth. $6.50, like every quarter. It's up 24%. It's on the left now. So the diluted normalized EPS is $6 a quarter. They don't even pay a dividend. They could afford to pay $1 a quarter or something, which would be a crazy yield. But look at the share buybacks. They bought back 3.8% of the company after they bought back 4.8% of the company, after they bought back 5.6% of the company, after they bought back 3%. So they're a share buyback monster. Because they don't pay a dividend, they could just do these insane share buybacks. So that's ticker symbol CVCO. Let me show you their valuation as well. I know they're a bit interest rate sensitive, but the forward PE is a 21. Their current PE is a 24. Seems pretty fascinating to me. I wonder if we can pull up their website right here to show you what some of the things they make are. Hey, what up, Kopang? CRSP would appreciate it. Yeah, what up, Steph? We'll do CRSP after this. So yeah, Cavco, they basically make these, they're not showing the outside of it, but they make these like small manufactured homes, and incredible they're way bigger than this, but this is like one of the things they make. Anyway, they make really cool homes. So that's one I really like. Good valuations. One of my favorite real estate plays out there. So yeah, that's them. Which hey, all these apps are all in the link tree in my bio. So let's check out CRSP right here. CRSP, I think this is CRISPR Therapeutics. I think they're still in like the startup phase, but let me verify that because I don't know. Yeah, I'm pretty sure. So when we go to CRISPR Therapeutics right here, they're the same prices they were back in 2018. So the stock has not done too well. I'm pretty sure that's because they still haven't sold anything. If we go to the revenue right here, yeah, look at this. The revenue is $800K quarter. The reason it says $35 million of revenue this quarter was actually because they actively sold out of their assets. They sold $105 million of their assets, and that's the whole reason they had revenue this quarter. So this wasn't like real revenue they got from like selling a prescription or something. So basically, this is still a revenue-less company. They're making $800K a quarter. And if we go to the net income, this is the kind of scary part. This is why I think the stock has done so bad, and why personally I kind of would stay away from this one. They're losing $100 million, sometimes more than that, of net income a quarter, all for a business that does $800,000 of revenue a quarter. So they're in these gene kit company. They just have no revenue right now, and I think it's a tough one to really justify. Like a $5 billion value. Again, as soon as they have sales, the stock will probably do good. Are analysts expecting sales anytime soon? I can check that real quick. But just the fact that they're yeah, look at this. So no. Unfortunately, I'd stay away from that company just because they have no revenue. But it's an interesting gene splitting bet maybe for 10, 20 years. I know our Kathy Wood is super bullish on them. Actually, we can check out the Kathy Wood portfolio right here. Where is that? Yeah, Kathy Wood's portfolios, let's see. Yeah, there's CRISPR Therapeutics, so Kathy Wood owns this one with you. It's 3.3% of her portfolio, so not too shabby. All right, there was another stock I wanted to look at. All right, let's see here. Microsoft, Amazon. Hey, try not to spam there. Yeah, we'll try and get to all these stocks here. Don't worry. So Amazon, you know what? Let's go over that one because I do own them in my buy and never sell portfolio. And I think they're one of the most attractive Mag 7 stocks to potentially buy the dip on. So here's Amazon right here. I have been dollar cost averaging into this one. I recommend if you ever want to buy a stock, instead of spending all your money at once, you slowly buy into them over time. It's a more disciplined, patient approach. But Amazon's at a fair valuation. We're not in a bubble right now, I don't think. Black Friday sales, they're about to release their Black Friday sales data, but from other portions of the data, it's like the best Black Friday apparently in history. I don't know about all that, maybe just from inflation, but check this out. The forward PE is a 30. I mean, for Amazon, a Mag 7, absolute behemoth, that's a very fair valuation. That's why I dollar cost average into this one at their current prices. This is an ETF in one that prints net income. Check this out. Look at the net income growth on Amazon. Net income's up 38% after it grew 55. Like at this growth rate, what's the net income going to be this time next year? They're already making a pretty, call it 20 billion in net income a quarter. But here's how Amazon is literally a behemoth and an ETF in one, I like to call it. Like, check this out. Obviously, they have Amazon.com, their online stores. Then they have their third-party seller services where they take fees and stuff from them, doing all the logistics and stuff. But the most valuable part of Amazon that people don't know is actually their cloud business, their AWS. It's 2025 Q3, the revenue was 33 billion. If you annualize that, that's insane. 133 billion a year. For 2024, it was 107 billion. It's over 100 billion of annual revenue for them. So their AWS business is their highest margin business. They don't make too much money, shipping you an item on the same day, very low margin there, but their cloud business is very high margins. They're also a subscription model play. Think Amazon Prime, Twitch Prime, advertising play with in physical stores, grocery store play. They're a grocery store play. They're like a UPS, Walmart, Oracle Cloud, all in one, Instacart, robotics play, drone play, real estate play, and AI play. I mean, check out how much they're spending on AI right now. This is what's kind of being questioned on Amazon. They're spending legit 30 billion plus of their after-tax net income a quarter on investments. Yeah, pretty much all their free cash flow and all their net income is being spent on AI right now. But that's what people love about Amazon. You don't want Amazon as your competition. They will eat you. Like literally Amazon, I love them. So that's a never sell stock. I would definitely. Sorry, I kind of ranted onto them. Hey, what up, Deborah? How's it going? Good to see all y'all. Tristan said APLD. Yo, let's check this one out. So APLD, that one's actually owned by NVIDIA. So if we go over here to their portfolio, their first largest holding is CoreWeave, but then their second largest holding is APLD. So this is kind of a cloud data center hosting play. They did just beat on their metrics right here. Let's see. So yeah, 60% of the revenue is data center hosting. Then they're like, hosting business as well. A different kind of, basically they own there's nothing proprietary. Like, if you think of CoreWeave, Nebius, Iris Energy, APLD, they're all the exact same company. Or well, they all literally just own a bunch of GPUs in data centers. There's nothing like special about this company, but they've been getting massive deals. Like the demand for cloud right now is insane. But check out, that's why they're doing so well. But check out the orange line right here. It's what analysts expected. Analysts expected 45 mil, they did 64. What's this app called? Yeah, hey, what's up, man? This is actually a brokerage right here where you buy stocks on. If you want to get it, it's in the link tree in my bio, very first link there. My favorite brokerage. Actually, all these apps are on the link tree in my bio. Oh, let me actually go over. They all ask for a bunch of information. They send you a tax form and stuff because they're brokerages. But anyway, let me give you a quick portfolio update because I haven't done that yet. So here's our Robinhood portfolio. Year to date, we're up 17%. This is known as our dividend-only portfolio. Every stock in here pays a dividend. Every stock in here is also in the S&P 500. Meta, Google, McDonald's, Constellation Energy, all great. Here's my total percent change on all these as well. Only stock we're down on is Carlisle. I did buy a little fractional share more of them. And here's our Roth IRA. We started this exactly a year ago, pretty much. It's not done well. 2%, at least we're green. But check this out. I do plan on making some sort of changes next week. As you know, if you watch the beginning of the stream, I'm really looking to buy both of these stocks right here. Ticker symbol SGI and CVCO, Cavco. So two pretty cool companies I'm looking to buy the dip on. Oh yeah, so that's our Roth IRA. Here's our total percent change on every stock. So yeah, InnoData's done good, and Webull has done great this past week. Anyone a shareholder of Webull in here? I've kind of been pumping this one for a while. And again, as much as I love Webull, I'd never recommend it as a huge position for you. Like it's $500 for me, but I'm really bullish on Webull, the app. So yeah, that's our Webull or our Robinhood portfolio. Let's actually go over to our Webull portfolio. Check this out right here. So, what up, Anudu? How do you go from $134 to $2 million? I want to know that too. So let's check this out right here. Here is this is why you don't listen to me. We're definitely haven't done too well, but here's our Webull portfolio. All time, we're only up 14.4%. Hey, shout out to Ran and Haydex. Yo, thanks for those gifts, the roses there. I appreciate that, Haydex. If you got a stock you want me to look at there, or Ran, let me know. I'll check them out for you. But yeah, this is our Webull portfolio. We have a lot of winners and a lot of losers in here, like UiPath, Zoom, Sprouts Farmers Market, and some losers you can't even see, like ChargePoint. Lost like $2,000 on them. So, but we do have some pretty decent winners. Some of my biggest regrets are selling out of great companies. Like Robinhood, I only have 5 shares, but I used to own way more. I had 50 shares. I sold those 50 shares for a 3x gain at $36. And that was my biggest regret because now I'm up 8 or 9x on them, which is crazy. Same with SoFi. I regret every share I've ever sold a SoFi. I shouldn't have trimmed it for a double. So anyway, yeah, we got Dave, Futu, Reddit. Some really, this is known as our risk on portfolio. I like to not. Most of these don't even pay a dividend. I do have some defensive names like Progressive, TAP, actually Pfizer. I don't know what I'm doing with Pfizer. I might sell out of them. I love them as their new weight loss prescription. They acquired Natera. It honestly is super interesting. I want to see what they do with Natera. It's mainly a dividend play. You're buying Pfizer to maximize your dividend income. They have a 7% dividend yield, but Pfizer is literally the same stock price that it was in 1997. So you're not expecting any stock price appreciation on them. Okay, let's see here. Let's keep going. Do they have, let's see here. Data center without power is a nightmare. Hey, that's why my favorite power play for data centers is actually CEG, because they're an unregulated utility. You look at NEE or some of these other names, the reason they're not doing too hot is because they're regulated, and they literally are not allowed to raise prices unless they get government approval, and they have to show the government reasons why they have to raise prices. And so, but anyway, CEG has been able, there's PJM auctions and stuff. The electricity prices, they're just raising on their customers because they can, and they're paying for it. Like Microsoft is paying like literally a 40-50% premium just to have access to. They're doing a deal with Microsoft where they have one nuclear reactor supplying solely one Microsoft data center, and they're paying a super high premium, like per megawatt hour or something. Anywho, that's the best nuclear play out there, by the way. CEG, they literally own 30% plus of all the U.S.'s nuclear reactors. Great dividends, buybacks, M&A with their Calpine acquisition, which is going to be accretive $2 to yearly EPS, which is just nuts. Hey, what up, Johnny? He said, can we go to SE stock? Yeah, we'll go to SE right here. Yeah, CEG's a beast. Let's see here. Yo, no way. Hey, we'll check out TYL after this too. Yo, shout out to the homie Steph on the YouTube stream. Yo, thank you so much for that $1 super chat. I really appreciate that stuff. We'll look at TYL stock, and if you got another one you want me to look at, let me know. I got you. I really appreciate that. By the way, we're streaming on YouTube and TikTok. The best way to support me is actually watching it from YouTube. So anyway, here's SEA stock. I believe this is like your Southeast Asia, like Amazon play, if I remember correctly. I could be wrong here. Yeah, so look at this. Southeast Asia is 70% of all their revenue, but they're basically like Amazon, but over there. E-commerce is 72% of all their sales, and they've been growing very nicely, beating on every expectation every quarter. Check this out. That's what the orange line is. They expected 5.6. They did 6. Actually, they had a slight miss. Whoa, okay. So they missed on their net income and on EBITDA by quite a bit. So something happened to their margins. So maybe the reason the stock isn't back to all-time highs is because analysts looks like they were expecting a higher margin, and that was real. Like their EBITDA didn't meet expectations. But I think those analyst expectations were too high because these numbers are still phenomenal. Check this out. The revenue is up 39%, and they still made crazy net income. They made, let's see. Yeah, they made $380 million of net income, after they paid $98 million in taxes. Like, that's insane. They're still making easily, if we annualize that, they're doing $1.2 billion in net income a year. What's the forward multiple? So still maybe a bit expensive. To keep it honest, I'd rather buy Amazon at their current valuation. So here's a cool metric. Active users, 670 million monthly active users. But this one might be more growthy than Amazon. Amazon can't grow their top line 38% year over year anymore. And there's a nice margin expansion here. Actually, I do like SE. The valuation might be a little too high, though. It's about 40 forward PE on them. So let's check out TYL stock. Well, I've never heard of this one actually. So Tyler Technologies, let's check it out here. So no dividend on this company. What's the valuation? So actually they are expensive, but let's see if this multiple is justified. Current PE is 65. They're trading at 57 times next year's net income. So the net income is supposed to grow another 10%. So let's see here. Enterprise software. Look at that. It grows double digits, hit a new record this quarter. It's never been over 430 mil before. And they also have platform technologies. Looks like that slightly fell year over year. What were the analysts expecting? So they beat on revenue by $1 million. They slightly missed on net income, and they did beat on EBITDA. So it's kind of like a mixed bag quarter. Let's see. So the revenue's up 9.6. What's their margins here? Because they have a really high multiple, actually. So 50% gross, 15% net. So yeah, they do print net income. Check that out. Easily, like at this growth rate, they're going to be making 80 mil to close to probably 100 mil in net income a quarter. Pretty good balance sheet as well. Let's see, they're doing share buybacks. Net income's up 11. EPS is up. Okay, so you have been slightly diluted year over year, but honestly, it's not too bad of a company. The valuation might just be a little too high. That might be why it's slowly coming off its all-time highs. Like, I don't really know if this company deserves that. It's a really high multiple. It really is, but they didn't have like the crazy growth I normally see for a company with that sort of valuation. So, but they are enterprise software. Software always trades expensive, and maybe they're unlike Adobe or kind of like a Salesforce, where Salesforce is really being hurt by the AI thesis. Maybe this is an AI beneficiary or something. I have no clue what they do, but they seem pretty interesting. Hopefully that was helpful there. Yeah, hey, no problem, Johnny. Let's see here. Mir said, Opendoor. Hey, that's kind of a meme stock. No real fundamentals there. This is basically an interest rate sensitive bet, kind of. You know, you buy this for its interest rate sensitivity. Basically, some dumb activist investor said, this is a $50 stock. Well, here's kind of what they're seeing, and I don't know if I believe it. I've heard of Opendoor. I've been to a few. All this company does is flip houses, and quite frankly, they're not that great at it. The repairs aren't good. But look at this. If we go back to the super low interest rate environment, 2021, 2022, the growth was nuts. Look at this. The revenue is 4-5 bill a quarter, triple, even quadruple digit growth rates. But check out what happened literally as rates hiked up in just a year. In just a year, this all happens in a year. Look at the decline, down 62, 69, 70, 50. This proves that this is a super interest rate sensitive company. And basically rates are coming lower right now, and people are betting on this as a way to, the revenue growth isn't good. I mean, the sales are down 33. What are analysts expecting here? Dang, the revenue is supposed to fall to 570 million. It's never been that low. Look at this. It's always been over $1 billion. It's never been 500 mil before. Hopefully they're wrong there, but and they lose net income every quarter. Nothing's really blowing me away here from I would never just buy and hold this stock. That's a pure swing trade in my opinion. And interest rate sensitive swing trade. I wonder what real quick, we'll check out what the short interest rate is, then we'll get to some good stocks here. Let's see. Short interest. So yeah, 17% of all the shares are being shorted right now, which is normal, but okay. Can I check for your dividend stocks? Does the dividends go into the brokerage account as cash? Yep. So basically, whenever you receive a dividend, it just goes right to your buying power on any brokerage. And then you can just withdraw it to your bank account after that. But I always recommend reinvesting the dividends. Pretty cool. So yeah. Do Palantir, please. Let's do Palantir at AS Lopez. Wait, let's check this one out. Shout out to Lopez. Let's see. LITE stock. I haven't heard of this one. Remind me to look at Rocket Lab, Bull, and we'll look at Palantir after. What happens is, yeah, hey, or I'm not sure what app you're talking about. All these apps, or I was just on the dividend portfolio, but all these apps I'm using are all in the link tree in my bio. These are all brokerages. They all ask for a bunch of information and stuff, send you a tax form. But this is my favorite brokerage right here, broker called Moomoo. It's in the link tree in my bio, that very first link there. By the way, all those links up there are affiliate links. So if you go and like deposit $100, we'll both get some free stocks on all these. So yeah, Webull's cool too. And Robinhood is just not as useful in terms, like if you're trying to really analyze a company, Robinhood does what it's supposed to do. You buy, sell stocks on there. And they have a great Roth IRA thing match. But I love this brokerage right here. They do all the same things as Robinhood, but you can better fundamentally analyze stocks and stuff. Okay, let's see here. LITE stock. Then I do want to analyze Bull. I love Bull. Bull is copying Robinhood's successful model. So here's Lumentum. Haven't heard of this one before. $23 billion company. The current PE is a 200, but the forward PE is a 75. So the net income is supposed to 3x from here. So this might be that I can see why the stock is kind of, they're called Lumentum. They've momentumed higher. Let's go check out what they do. So they sell components. Wow, that's up 63% year over year. And they sell systems. Let's check this out. Yeah, analysts are expecting the revenue to just straight line up. Yeah. Okay, so they had a little one-time adjustment, but the net income is supposed to go to 60, 70 cents a quarter. So yeah, it looks like the future. Yeah, look at the growth, up 58% year over year. Did they do an acquisition to get that? No. So it's not like they acquired a company to inorganically get this growth. Like it's their core business that's just seeing massive demand. Let's see what their website is really quickly. Their website's not too good. I'm trying to find what you do, buddy. What do you sell? Lumentum products, datacom transceivers, optical circuit switches. So kind of looks like some stuff that's kind of in demand right now for data centers, components, for high electrical gear systems. Yeah, that's real nice. I don't know if I'd pay its current valuation though. They are really high up there on the valuation, but yeah. Hey, what up, Silver? Get that drip? Yes, sir. Dividend reinvestment. I don't have dividend reinvestment turned on because I'd like to manually reinvest my dividends, but just because I'm so hands-on on my portfolio. But I always recommend drip. Yeah. Hey, shout out to the member Jeff Mack. Let's do it. Yeah, we'll look at Futu and Bull. So I'm forgetting so many stocks and stuff behind here, but shout out to Jeff. Let's check out SanDisk. I think this is another. I think it's like a HDD or like a SSD kind of company. Let's go check out real quick right here. Something for data centers. So solutions based on NAND flash technology. Its products includes SSDs, memory cards, and USB flash drives. You know, you'd think that this is kind of all old tech, but their stuff is in such demand right now. So here's kind of some of the stuff they sell. And these SSD, high memory cards are in such demand. Let's see what the revenue growth expectation is. So yeah, the revenue is going to go from 1.6 to 2.6. And the EPS is it's gonna be like, whoa, $3 those next 2 quarters. Yeah, look at the EBITDA expectations. That is insane. It's gonna go from negative, or basically 2 million to 600 mil a quarter. So that's why this stock is at such a massive rally, and they probably deserve it too. Forward, that can't be real. No way. The forward PE is a 15. They're trading at 15 times next year's net income if these EBITDA expectations are right. Like literally the profits are going to go from nothing to 600 mil a quarter, but they're going to be making like 3 to 4 mil in net income a quarter. They must have acquired something right here. Let's go check, or I don't know. But anywho, that's super interesting. Thanks for bringing that up. There's a forward PE of a 14. That's super interesting. So let's do Bull right here. Then we'll get to Palantir. I so forgot to get to Palantir. So here's Webull right here. And I am a Webull user. I've had their brokerage for many, many years, like 4 years now. And our portfolio is on terrible. That's why you don't listen to me. We're only up 14% all the time. But I have been using Webull for 4 years. And when they IPO'd around 6 months ago, they added this new update where you can do this now prediction market stuff. And I've never done any of this, but there's so many weird things that you could like Fed policy stuff, economic data, whatever, games and stuff. But they also added in crypto to the app. It says new because they just added this back and the prediction market. And that's where I think this brokerage is going to print money, because whenever you buy and sell stocks in a brokerage, they make like a fraction of a penny or something. But whenever you go do the prediction market stuff for crypto, like Robinhood has said, they make a crazy juice of a margin on that. So I did buy some Webull shares. I got 50 shares of them. As much as I love them, they are still expensive. They're trading at like 40, 50 times next year's numbers, but the growth is there. And I think the growth is going to be higher than what the analysts expect. So, or what's the forward PE according to them? Yeah, 67 forward PE. So they are expensive. And that's why I wouldn't have them as a major size position yet, but I'd certainly start to nibble on them. And I did. So yeah, they had a great week on Black Friday week. So, okay, Palantir, let's do this one. So, hey brother, did you send hey, that was not me who followed you. But by the way, watch out for people impersonating me. I'll never follow you, DM you. I sell nothing. I literally sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you, nothing like that. So yeah, watch out for people impersonating me. So here's Palantir. This is a growth behemoth, but I would love to own this one. This is a stock I would own. It's the kind of stock I'd own, but too high of a valuation. The forward PE, they're trading at 230 times next year's numbers. It's still too expensive for me, but this is the kind of company that definitely deserves a high multiple. If we go to their government revenue right here, some people don't like them because ethical point of view, they're helping out ICE. So many police stations use them, the military, the Air Force. But this has been super growthy, their government contracts. That's why they're in a lot of, if you go look at some defense and like aerospace defense ETFs. That's why you'll sometimes see Palantir at the top of them, because a lot of their revenue does come from the military and stuff. But check this out. Revenue's up 55, after grew 33, after grew 12. Like, the growth rate is growing on them, and not just their government revenue. The best part of them is actually the commercial side. Check this out. The commercial side of revenue, like with other S&P 500 companies, it's up 73%. It's never been over 500 million before. Like, the growth is nuts. That's why they certainly deserve a high multiple. They're beating on every expectation every quarter, printing net income every quarter, fortress balance sheet, no debt at all. This is a stock I own, but the valuation's still too high. I love them though. Great numbers, man. One of the best out there. Actually, I used to own them. I hate myself for selling it. Hey, yo, shout out to the homie Brian Paul, the member on the YouTube stream. He says, I'm at an all-time high after last Friday. What were the 2 stocks you're buying? Yeah. So I recommend watching the very beginning of the stream to see my full in-depth analysis on this. But this is a really cool name right here. There are 2 stocks you probably never heard of before, and that's what I love. I want to try to introduce you all to new stocks. I'm going to make a whole YouTube video about this stock and the other stocks soon. But this is Somni Group. You probably never heard of them. This is the company that actually owns Mattress Firm, a bit of a money laundering player or something like that. But they acquired them, and they're upping the franchise royalty structure. And you know, the franchisees of Mattress Firm are the ones with money, so they can afford to. Anywho, they're at all-time highs. The forward PEs of 28. This is the kind of stock I think is going higher. I'm not buying them yet, but they're at the top of my watch. It's just because they're so interesting, like super interesting stock there. The other one is Cavco. They make manufactured homes. Some of the best financials I've ever seen for a stock. They are a stock buyback monster at a fair valuation. What's the forward PE? Yeah, 23 forward PE. They could have easily afford. They're doing like $6 of EPS a quarter. They could afford to do like 50 cents of dividends a quarter. They just choose not to. Like, look at the growth rate of the EPS on them. So anyway, Cavco is a super. I was just looking at some of their homes. They're so cool and affordable. It's like they're like, their mission is like, this solves America's housing shortage problem. Anyway, I'm buying them mainly for the financials there. I love the product, and I love the financials. That's the best part. The great financials there. Okay. Is Palantir an AI company? Yeah, they're like a data management company. Yeah, I'm sure of some sort. Yeah. Don't forget you said Coinbase. Well, hey, let's check out Coinbase. I forgot about them. So Coinbase, you know, who actually owns that is actually Cathie Wood. If we go to the Cathie Wood portfolio right here, oh, dang, it's fallen from her top holdings. It's now 4.1% of her portfolio. So yeah, it's a bit of a Bitcoin proxy. I mean, look at this. I've overlined here the price of Bitcoin, and then there's the price of Coinbase. So as you can see, while they're not perfect, they certainly like rhyme together. So it's kind of a Bitcoin proxy. But let's go look at their financials, because that's what matters. And their financials are actually pretty good. This is a really cool metric. This is their monthly transacting users. So not just monthly active users, but monthly transacting users are 9.3 million versus 7.8 million monthly transacting the same time last year. So that's grown. And it looks like they're making good net income. There was a bit of a one-time adjustment, but they are making a couple $100 million a quarter, which is cool. The sales are up 55%, not too shabby. So, and they're actually, if we go to, I wonder if the news is still down here. They're getting into the prediction market stuff. Oh my goodness. Oh, shoot. Man, these winter allergies just get to me. Okay, so Coinbase, they're interesting, a bit of a Bitcoin proxy. I'd maybe rather just own Bitcoin, but are you holding Red Violet? No, I don't own that company. So let's check out NTRA right here. Yo, shout out Brian, NTRA stock. So I've actually not heard of this stock before, but they have done phenomenal. Check that out. The stock is that an all-time high? The weekly chart doesn't want to load there, but yeah, the stock's at an all-time high. They are still losing money, but the company's worth $33 billion. Yeah, that's a phenomenal chart. So let's go check out their growth. Let's see how they're doing. So development and commercialization of molecular testing services, So, you know, I've looked at CRISPR therapeutics and a lot of these DNA kind of stuff, but this one has real numbers and real growth behind them. Look at that. They're crazy beating on expectations. That's the orange line here. They're beating on revenue by a huge margin every quarter. So beating on revenue, they missed on EPS slightly and missed on EBITDA slightly. But yeah, the top line growth, you can't make that up. Revenue's up 35. After it grew 64. After it grew 30, after it grew 33, after it grew 61. So they're on a streak of growth, I will say. And this is a pretty good balance sheet, deleveraging as well. The liabilities used to be 44% of the assets. Now it's only 31. So, hey, not too bad. Wait, so yeah, they used to lose money. They are still losing that income. They were narrowing their losses right here, but then the expenses kind of creeped up. Yeah. Honestly, I like the growth there. I wonder what their website is. Oh, they're in the ARC portfolio, I believe, as well. So genetic testing services, non-invasive prenatal test. So maybe that's most of their growth. I don't know. Pretty interesting, actually. So there you go. Yeah, health. So anyway, just looks like a bunch of healthcare testing company, and they have good growth, I will say. We want to see them get profitable soon. Certainly interesting, I will say. Hey, shout out Zeus or Seuss. What up, dude, from Gravity Falls? And someone said, oh, Nebius. Yeah, hey, what up, user? We'll get to Nebius right here. Yeah, if you got any stocks you want to look at, let me know. We'll get to NOK after this too. Iris Energy. We'll try and get to all these here. So I'm reading both the YouTube and the TikTok stream chat. So Nebius stock, that one's also owned in the NVIDIA portfolio. If we go to NVIDIA's portfolio, they own CoreWeave, APLD. And so CoreWeave, APLD, they're like the same thing. And so is Nebius. So all these companies, they basically own a bunch of GPUs and data centers. And their GPUs are in such demand right now from data center hosting companies. Like some of the Microsoft Cloud, Microsoft gave them $16 billion to host the Microsoft Cloud on Nebius's servers because Microsoft didn't want to take that liability. So what I've loved about Nebius is how growthy they are. Check this out. The revenue is up 4x. It's 150 million, a record. It's never even been close to that before. So the revenue is 146 million. Check out what's expected to be in 2 quarters. It's expected to be 469 million. The revenue is supposed to legit 3x from here, and mostly from that Microsoft deal. And the EBITDA is supposed to narrow as well. One thing I don't love about Nebius is they are a money burner. This was a one-time adjustment. They didn't actually make that money. They're losing like 100 mil plus a net income a quarter, but it looks like the losses are expected to narrow as the top line just grows. So that is good news. I wouldn't honestly have this one as a major size position. In the long run, they're kind of the bag holders, but because there's so much depreciation from the GPUs and stuff. But they're in the Netherlands as well, so this isn't a U.S. company. They're headquartered in the Netherlands, so I don't know if there's any like weird foreign tax. But anyway, certainly cool. Backed by NVIDIA. NVIDIA owns them. NVIDIA owns. If you're wondering why is NVIDIA giving money to CoreWeave, APLD, and Nebius, because NVIDIA is giving money to them just so that they can go buy NVIDIA GPUs. They need them to do good so that NVIDIA can do good. So they're kind of being propped up right now by NVIDIA, and that's why NVIDIA was having a bit of a hiccup around earnings time because bit circular of money. Like also NVIDIA owns 100 billion of OpenAI. OpenAI owns 10% of AMD. So literally when AMD stock goes up, NVIDIA indirectly benefits and go up as well. But okay, let's keep going here. NOK, I think that's like a shipping company. Let's see. Hey, what up, Andres? Ooh, we'll check out Futu. I forgot to get to that one. Oh yeah, Nokia too. That's what you mean by Nokia. Yeah. So NVIDIA's taking a stake in a bunch of different companies. Let's see right here. So, NVIDIA bought a $1 billion stake of Nokia. Let's see if it shows up in the shareholders yet. It probably doesn't yet. But yeah, NVIDIA bought $1 billion of this company at a much lower valuation. It was like down, I think it was at like $5 a share, but the current market cap is 32 billion. They're a European company. Again, Nokia, they make those phones. We'll convert the currency from euros to USD. And if we go to their stock price, they've been out innovated for the longest time. Their smartphones have done terrible. Go back to the year 2000, the stock was $50, $55, and today it's $6. But they've given up on the phone business now. They're now like, I don't know. Let's go see. So network infrastructure, I know they had some data center demand, mobile networks, cloud and networking services. That's what was highlighted in the kind of AI, or let me actually go look at the AI earnings. So yeah, network infrastructure grew 11% year over year, benefiting from increased demand in AI cloud and sectors, or AI and cloud sectors. Optical networks achieved 19% revenue growth, reflecting strong market adoption of advanced networking solutions. So anyway, I don't know what's the valuation on this one? I mean, 15 forward PE. So that's actually a pretty fair valuation, 15 forward PE on Nokia, not too shabby. So Futu, if you're wondering, I do own Futu. Actually, I'll pull it up right here. Actually, all these apps right here, all 3 of these apps are brokerages, and I own the stocks of all 3 of these brokerages. If we go right here, FUTU, that is this app that I'm on right now, publicly traded. This broker right here. My favorite app, by the way, this is my favorite app to buy stocks. And if you want to get it, it's in the link tree in my bio, that very first link there. But yeah, it's good. Let's go look at this app that we're using, their financials right here. So this is what's cool about Futu. And sorry, my Wi-Fi is like so bad today. But all right, check this out right here. Or we can see their active users right here. Their users are 28 million. But it's good to know, again, even if this company were to go bankrupt, you're still FDIC insured for 250K, but this company is nowhere near bankruptcy. They made 413 million of net income. It's after they paid 80 million of taxes. Like, that's insane, the net income they're printing. So the growth rate specifically and the margin. So if we go to the revenue was 822 million, up 86%. So revenue is 820 million. Net income was 420 million on that. So what does that mean? Legit 50% net margins. These brokerages print money. This app just added in crypto, and that's also led to triple digit growth on that business. But brokerages make a lot of money, obviously, from commissions and stuff, but from interest income. This is also Interactive Brokerage's largest segment of income. It's grown like crazy. Basically, if you look at the Milmar screen right here, I have $50 of cash. It earns me a 3.6% APY. They give that to all their customers for free because whenever you go keep your cash in here, you get a 3.6% APY, but they get like a 4.2% APY on it, and they just pocket the difference. So, and this is what I love about this. It's a completely free app, costs nothing, no commissions, no fees. So, but that's what's so cool about Futu. And they just added in crypto to the app. That's also where they make a high margin kind of commission whenever you do that. So yeah, and they have not gotten into the prediction market stuff yet. I think they're kind of smart for not doing that yet. But whenever they add the prediction market stuff, if they ever do that, maybe they won't. That'll add even more crazy growth. Yeah, here's their other income. This is their crypto business. Check this out. Triple digit growth the past 4 quarters. And that's just one. Like, we can go to their brokerage commissions. This is also a crazy 90% growth year over year on this one. We go to their interest income right here, up 79%. So you must be saying, whoa, these are crazy high growth rates. This company must be at a crazy expensive multiple or something. Nope. They traded a 17 forward PE. That's so fair, in my opinion. And they're about to release a special dividend. If we go down here, every December, they do a special dividend right here. Last December 6th, they did a $2 special dividend. I think with their crazy net income profits, they're probably going to do like another, I'm going to say $3 to $4 special dividend. And that actually will give you around like a 2% yield. Actually, yeah, just instantly. So anyway, Futu is one I own. I'm happy with their current valuation. I'm totally looking to buy more of them. So anyway, great financials here. And again, that's the Futu, that stock is just this app right here, publicly traded. And I've used their app for years. I love their app right here. Hey, if you want to follow me, there's like a whole social media kind of thing on here. Oh yeah, on this app, like you can see like you could have a move folio, and anywho, there's so many cool features as well. Like you can, okay, let's look at some more stocks here. Someone said SCHD. Hey, just wanted to say, Circular Money, hey, what up, Planet? SCHD, this is actually an ETF right here. And then we'll look at INSM. Yo, Brian Paul, what up, dude? We'll look at INSM. Yo, Free Me, what up, K-Dude? Good to see you, homie. Hope you're having a great day, great Sunday. And Brendan, we'll check out all these apps right here. Bull and Hymns, do you think Bull will accidentally? So yeah, one thing I'm really bullish about, yeah, we'll get to Webull too. So anyway, here's SCHD. This is kind of like a dividend growth ETF. It's kind of like a way to get out of, not be so tech heavy. Like this is kind of like the S&P 500 without tech. And it's a dividend ETF right here. If we go to the dividend, you basically get a 4% dividend. That's because they basically own a bunch of stocks that have around a 4% yield. I love a lot of these, like AbbVie, Coca-Cola, Chevron, Pepsi, Merck. Its largest holding used to be Broadcom, because Broadcom used to have a 2% yield, but this has dramatically underperformed the S&P 500 because, again, you're buying this. This will never, ever outperform the S&P 500, but no one expects it to. It's not supposed to. It's just supposed to, give you 1% of your money back and then kind of, yeah. So anyway, I do like SHD as a dividend play. But if you're like 10, 20 years away from retirement, I wouldn't exactly buy them yet. You buy that when you're ready for the income. Nathan is ready for markets to open. Yes, sir. Hey, the market actually opens at 8 p.m. What platform? Hey, yeah, if you want to get this platform I'm on, again, this is a brokerage right here. It's in the link tree in my bio, that very first link there, broker called Moomoo. Actually, all these brokerages are all in the link tree in my bio. They're all affiliate links too, full disclosure. So if you don't like deposit $100, we'll both get some free stocks, so that'll help me out. But yeah, you can just type it into Google, broker called Moomoo, Robinhood, Webull. Not sure which one you're talking about there. Okay, so let's look at INSM. I wanted to pull up something there, or INSM. Let's check this one out. So this is Insmed. Wow. Yo, this is incredible. It looks like they gapped up on some FDA approval or something, and they've just been up ever since. So they're a $44 billion company. Wow. Let's see. So if we go to let's go look at their right now revenue. Okay, I keep clicking on the wrong things here. So here's the analyst expectations. Looks like there's a lot of future growth expected. The revenue is going to go from 91 million to 194, way more than a 2x. They beat massively this quarter specifically. Analysts expected 115 million. And they reported 142 million. Hey, Crookie, thanks for that gift. I didn't even see that. Hey, thanks, Crookie. I appreciate that. So if we go to the revenue, yeah, this is great. Revenue's up 52% year over year, but this is the bad news. They are still losing a lot of money, 200 to 300 million in net income a quarter, but they have the crazy growth that's expected there. It looks like they just fortified up their balance sheet. This is a biotech company, commercialization of therapies for patients of rare diseases. They must have had really successful results of their trials or something to be worth this much already. They have real revenue, so it must work. Anyway, I really like that growth there. 70% of the revenues from the US. Let's see if there's any news down here. Weekly news, nope. That's actually pretty interesting, but I'd be careful with them I wouldn't probably buy them at all-time highs. Saving to trade, ideally with $500. Hey, well, you don't even need that much, I started with like $50, Again, I'm not a trader. I don't recommend really anyone trading. Most people, not even most retail investors, but most hedge funds cannot outperform the S&P 500's 8 to 10% CAGR. So you'd be dumb not to at least have some of your portfolio in the S&P 500, I think, or have the majority of your portfolio, the backbone of your portfolio in the S&P. Then I'd play around with some individual stocks or trading strategies, whatever. But definitely you need to own some of the S&P 500. I just start out with that, The goal isn't to get rich quick with stocks. It's to get that 10% yearly return. You start with $100, you turn to 110, and then you snowball it. 110 to 128, and then 128 to 100. Now, you get the point there. But all right, let's keep going here. Yeah, QQQM, that's a great ETF. SPY, VOO. Okay. Yeah, free me. I think Bull, we actually just went over this. I think Bull is going to do really good because they just added in the prediction markets and crypto to Webull. So that's why I bought a bit of Webull, but they're still too expensive. And HIMS, this one's going through a dilemma right here because the analysts are bearish on their net income. Like the net income, they're trading at 72 times next year's net income. And one of the reasons why their net income was so good back here was because they were selling these GLP-1, basically weight loss prescriptions when for like crazy, like $499 a month or something, but they had so much margin on that. That's where they made most of their net income and growth back then. But they can no longer sell Novo Nordisk's Ozempic on their website now. And so now they now sell a weight loss prescription. It's not Ozempic, but it's for a much lower, they sell it for a much lower price and they make way less margin on it. But I still love them for the top line growth and their subscribers. I think they have now like 2.5 million paying subscribers. They have some other stuff. They have a ton of other businesses as well, like their testosterone and hormone, all that other stuff. But look at the top line. Revenue's up 50, after it grew 77, after it grew 56, after it grew 95. But the only thing I am concerned about is these net income projections. I mean, the net income is supposed to basically be the same as last year. They're still net income positive, which is great. They're going to be net income positive every quarter, but it might be a little too high of a valuation. Their margins aren't keeping up. Yeah. It's unfortunate that happened to them. Like they were basically selling these weight loss prescriptions when it was still an FDA shortage. And whenever a prescription is in like FDA shortage or whatever, anyone is allowed to sell that product, I believe. So yeah, their margins is just HIMS is certainly interesting though. But I don't know if I'd pay its current valuation. Let me actually see here. So yeah, look at this. Revenue increased 49%, fueled by a 50% rise in online revenue and a 21% subscriber growth. They now have 2.47 million subscribers. Just EBITDA grew 53%. Exceeding internal efficiency targets despite margin pressures from price reductions in GLP-1. So actually, it looks like they did better than they thought. The company completed a $260 million acquisition. Whoa, that's cool, to expand into European markets and launch new hormonal health products, while GLP-1 treatment prices by reducing prices by 20%, impacting profitability. Okay, so there's kind of your mixed bag news on them. Your bio doesn't have the platforms you're using. Oh, hey, so sorry. You're right. It's actually in the link in the description. If you're I didn't know anyone on the YouTube chat. Yeah, hey, my bad there. If you're on the TikTok stream, all these apps, all these brokerages I'm using are all in the link tree in my bio. If you're on the YouTube stream, it's actually in the link in the description. Yeah. Also pasted the link tree there. Okay, so let's see here. I remember you talking about Dave a few months ago. What has happened to them recently? I think Dave is just getting back to like a normal price right here. But here's the crazy thing. We bought them at such a good, look at the stock right here. Holy cow. It went from like $4. And I bought this stock. Where's the buy order right here? I bought the stock on this day. I didn't feel great about it because this is what I was looking at when I bought the stock. I was looking at a stock that already basically went from nothing to $50. But I'm like, this is the kind of stock that's going to continue to go higher. And here's why I think it's still going to go higher. The forward PE is an 18. I mean, the whole industry is being a little squeezed right now, but the growth, like this, look at the free cash flow per share growth. I don't even know what to say. I love everything about this company. The actual profits, everything here is headed in the right direction. I mean, the top line growth, sales are up 62 after it grew 40. The profits, the free cash flow, the net income, the forward PE, the current PE is a 21, forward PE 18. My opinion, this kind of stock is just going to go higher. I did take profits on them though. I sold some shares at 272. Well, what's it today? 218. I'm actually looking at buying back maybe one more of those shares. But super cool play on Dave. Sezzle's being a bit squeezed. I might actually rather buy Dave more than Sezzle now. I think those two medicals will fly when they get profitable. Yeah, Brian, whenever they get profitable, they'll exactly. iPeptides. Hey, Freemy, what's up, dude? I'm not sure what that is. Literally customizing your character. Is there like a stock for that? Are you still bullish on MUSA? Absolutely. What up, Zero? Hey, my bad. I'm missing some stocks here. What is MISO? If you got any stocks you want me to look at, give me the ticker symbol and we'll try and check these out here. On average, how many people make really good money on stocks? I always see people making a lot. Well, the average person does not outperform the S&P 500. So literally, the people that are getting rich are just the people that are doing the boring but the right thing, that are just buying and holding great stocks for the long run and buying just great ETFs for the long run. Because my biggest mistake, and what I found is your biggest mistake will literally be selling out of great companies for a profit. Most people, when they're up double, triple on their stock, they'll reduce maybe half their position or something. But that's why I made this portfolio right here called our buy and never sell portfolio. It's kind of like my experiment where once I buy a stock in here, I'm literally never allowed to sell it. I just literally diamond hand it. And that's the reason we're up 175% versus the S&P up 62. And we're up 83% year to date versus the S&P up 16. It's because we didn't sell before today. So I always recommend just buying and holding great companies. Oh, well, hey, remind me to get to Rich Tech Robotics. That's a really junk company, kind of trash stock, but wouldn't recommend them ever, besides maybe a short-term momentum swing trade. But we'll get to them after this. I'll show you why I don't like them. I don't just like to, I have reasons for it. I'll show you my reasoning behind it. So here's I don't like to just be bullish on every stock right here. I'll try to give you my honest, real thoughts on them. I try to never be biased or anything. By the way, I sell nothing. I have no course book, WhatsApp. I'll never follow you, DM you. Watch out for people impersonating me. Here's MUSA. This is my favorite oil and gas play because I think it's going to be the most growthy. And if you look at any oil and gas stock right now, they're struggling because the price of oil has been so low. It's been a super slow summer. You look, and this isn't just like MUSA exclusive. You look at Chevron, Exxon, the revenues are all in the toilet right now, declining. But this is my favorite one to bet on when oil and gas prices go up, because most dividend stocks, as you know, or most oil stocks, as you know, pay crazy dividends. That's why a lot of people like oil, because they know investing in oil, you're not going to keep up with the S&P 500, but you own oil for the times when there's wars, recessions, all that kind of stuff, currency fears, whatever. And oil does good in those environments. And so it's a nice diversification. It's worth owning some oil, but not as a huge chunk of your portfolio. And what I loved about this one specifically is because their dividend yield is so low. They only have a 0.5% dividend yield, but look at the payout ratio. It's a 7% payout ratio. So what is MUSA doing with all their leftover money? Well, I'm telling you, the very best part about this company and why I bought them is because of the sheer share buybacks they do. Look at the top here. They spend $100 to $200 million of their after-tax net income a quarter, which they can easily afford, buying back their own shares every quarter. If we go to the dividend, this is why there's so much also future room for dividend growth. The dividend cost $10 million a quarter, and they're spending $100 to $200 million on share buybacks. And they can easily afford that too. The net income is easily over $100 million net income every quarter. This was a one-time adjustment this Q1. They had the free cash flow as well, is always like, it's insane. So that's my favorite oil and gas play. And again, their numbers don't look great right now. The sales are negative. It's because all of the or Exxon. Let's go to Exxon, the biggest oil and gas stock right now. We go to Exxon right here. If we go to their revenue as well, maybe theirs won't be as bad. But yeah, look, revenue's down 5%. Last quarter was down 12%. So that's my oil and gas play. Again, wouldn't have it as the huge size position in your portfolio, but this is one I really like. We're up 5% on them. Oh, Ferrari's an interesting one too. I like them too. Okay. Um, Vertex Robotics, yeah, super quick about this one. I've looked at all the robotics companies out here. This one's junk. They have no IP, no patents, they have no revenue. They just don't even sell anything really. If you go to the revenue right here, the revenue's $1 million a quarter. The revenue's down 18%. It used to be it used to be higher. So basically, this is just a momentum kind of losing money every quarter, no revenue, million of revenue a quarter. Are analysts expecting revenue to grow though? Let's see. I mean, revenue is going to be 1.3 mil and 2.3 mil, and they always miss every quarter. So this is not a good robotics company. What this is a short-term swing trade kind of stock. If you're looking for a great robotics company, check out like a Symbiotic or even an Amazon. Amazon is the best robotics company. Even though they're not a pure robotics play, they are the best. I just diamond hand them. Yeah, so Amazon, they do those where they have the big warehouses that need robotics. That's what Symbiotic is doing. Wow, look at this chart right here. They're at an all-time high now. I've been pumping this one for a while, wow, that's basically all-time high on Symbiotic. If you go to Symbiotic, their largest share or second largest shareholder is Walmart. They help out Walmart with their logistics, and they have over 1,500 registered IP and patents and real growth, real sales growth. So that's why I'd way rather buy a Symbiotic over a Rich Tech Robotics. I mean, it's just not. Okay, let's see here. I'm so behind here. What do you think of Black Friday rises? Oh yeah, apparently some data like forecast like the strongest Black Friday sales ever. I don't know. I really want to check out what Amazon says for their Black Friday stuff. So I guess we'll get that data probably after Cyber Monday. We'll get that. Because I think it includes that. I don't know. What do we want to look at here? I'm so behind on stocks. Do ASTS. Hey Nick, what's up, dude? This is another kind of speculation play. Well, actually, not really. Not really. I think they just got their first ever revenue. Let me see here. So yeah, look at this. Before today, this company had no revenue, $1 million a quarter, but this quarter was 14 million. They finally got their first ever like revenue realized, and we can see. Check out the analyst expectations. This is the great news. Like the revenue's literally going to go from nothing, from $1 million a quarter. 14 mil this quarter, supposed to be 40 million next quarter, then 35 million. They have missed on expectations every quarter, but anyway, it's kind of like another space launch company. I'd maybe rather buy Rocket Lab over this company. Or I think they just do like I think they have over like 1,400 satellites in orbit right now. And they're partnering with AT&T, Verizon. To 4G and 5G speeds anywhere on Earth or something. So satellite, Wi-Fi, something like that. There's also defensive applications. Anyway, kind of cool. It's way too expensive for me to pay, but there is a nice future growth there. Kevin said CLS. Is that Celestica? So let's check out Celestica right here. I think this might be a Canadian company, but they have incredible growth. Check this out. The stock is pretty much at an all-time high. The forward PE is a 46. Right now it's a 56, so the net income is supposed to grow a big chunk. Let's see if there's any AI news down here. Celestica strengthens role as key integrator in Google's TPU infrastructure. That's very cool. Celestica has been confirmed as a major system integrator for Google's AI infrastructure, managing board and rack integration, assembly, and testing for TPU deployments. And, TPUs have been in such demand right now. Meta's considering spending billions on Google's TPUs. So, yeah, if we go to the AI beneficiary here, if we go to their connectivity and cloud solutions, look at the growth rate in the middle here. It's up 43% year over year. Advanced technology solutions, that's like down 4%. But check out what the analysts are expecting versus what they're reporting. Kind of the orange line here. They beat every quarter on revenue. Was that a massive beat on net income? They expected $1.30. They did $2.30. Just insane. So the revenue is up 27. The net income's up to 250 mil. So anyway, that's really cool. They probably deserve this high valuation. Maybe too high probably still too high for me to pay. But that Google TPU thing, I did not know about that, and that's super interesting. Hey, yo, shout out to the homie Steph here on the YouTube stream with the $2 super chat. No way, dude. Thank you so much. Yeah, we'll check out ARMK and MSI. We'll get to all these right here. First, let me look at TEVA. So we got to look at these first. Hey, then we'll try to get to, Bull is certainly on a run. I'm super happy there. Do you like Path? So actually, really quickly, I do own Path. I actually don't love them. They are partnering with like Google and OpenAI and stuff, but they're just they've been out innovated. Wouldn't buy the dip on them. I'm actually kind of looking to sell out of my UiPath. But let's check out, and a shout out to Steph again for those gifts there. But let's look at Teva Pharmaceuticals first. $30 billion company. Stock's done phenomenal, actually. Or, well, actually, not when we zoom out. They're the same price. Actually, they're the same prices they were back in 2003. But they have done great the past couple quarters here. Let's see. So generic products, usually companies like spin these off because they're low margin, but let's see. Yeah, so single digit growth, your sales are up 1.3. Last quarter was down 2.7, but then they sell their own products like Austedo. Yeah, that's great growth in the middle. Check that out. It's up 38% to a new record. It's never even been over 600 million before. They also sell Anda, something like that. That looks like it hasn't done too well. That's up 3%. Other, so I don't want. It's like a mixed bag results here, but their profits just were insane. So yeah, they really did make 400 mil in net income, 300 mil. So looks like they're finally back to profitability. We might just want to see the growth kind of come back. 3.4, 0.2. Inactivity. Oh my goodness, TikTok. All right. Well, we just had to fill out a caption. We are back now. Hey, what up, Jello? Good to see you. Hope you're having a great Sunday. Let's see here. Yeah, we're finally back. This is our first stream in like a week. So, hey, let's do ARMK right here. So this is Aramark. So this stock, I don't know what they do. Is this a real estate company? So they're a $9.7 billion company. So specialty business services, industry chain, chemical fiber. Well, what is this company do? Engages in provision of food, facilities, and uniform services. Well, what's their website right here? Okay, well, let me just go to their where the revenue comes from. So food and support services. That is here's their kind of annual revenue right here. It's finally recovered from COVID. Well, wait, maybe they did an acquisition or something. Well, let's see. Food and support services. Well, did they do an acquisition? Not, or maybe, but I don't see it. So maybe that was a one-time adjustment. The revenue is up 15% year over year. So $5 billion of revenue. And out of that, they only made 90 million net income. Yeah, the profits did fall year over year. So the sales were growing nicely, but the margins did not keep up. I wish I'd give you more thoughts on this company. What's the yield on this stock? So you get a 1.13% dividend yield. So it looks like some sort of food support service company. I don't know. Free cash flow was $1 billion this quarter, but all the other quarters is a little choppy. It looks like or fiscal year Q4 is their best quarter every year. I don't know. That one's interesting. But one stock that is actually pretty interesting is Motorola. They're actually a government like police station play because a lot of police stations use like Motorola communications, like their walkie-talkies, their radios and stuff. So Motorola is actually, that's why they've been doing so well for a phone stock. Like, look at this. You'd think Motorola would be doing terrible, but look at their stock. It's actually done incredible. One of the best performers. So let's actually check out the dividend. You get a 1.1% dividend, not too shabby here. So products and systems integration and software and services. So what's their gross margin? That is curious to me. So yeah, 50% gross margin, and they net basically 18 to 20% net margin on that. So yeah, check that out. They're making, over $2 billion of after-tax net income a year. That's incredible. And it looks like I want to see what they just acquired. They just bought something for $4.5 billion. So that's going to add even more growth. Maybe the reason the stock is falling because investors didn't like that acquisition because they gapped down on earnings day. But that's super interesting. Wow. I wonder what that acquisition was. Okay, so what stock is in? It's a trends. I'm not sure. What up, Jingle? And hey, what up, VizHud? And Craig said ABT. What's this one? Abbott Laboratories. I think they spun off AbbVie a long time ago. So like a medical device company, look at this. So medical devices are 50% of the revenue. Then they're in diagnostics, nutritionals, established pharmaceuticals. So pretty cool, actually. Only 38% of the revenue comes from the US. So it's not like a pure US play. All other countries, 35, then Germany, China, all those other countries. But yeah, if we go to their net income, the sales growth is mid-single digits, 6, 7, 4, 3. So, but the net income is great. They had a one-time adjustment this quarter. They didn't actually make $9 billion, but they're basically making 1.7 billion of after-tax net income a quarter. They pay a dividend too, right? Yeah, 1.8% dividend yield. Let's go see how much the dividend costs for fun here. Or what is this for here? Abbott recalls 3 million freestyle Libra glucose sensors after reports of deaths and adverse events. Well, that's not good. Well, but they're making 1.8 billion in net income a quarter. What's the dividend? So the dividend cost $1 billion a quarter, so they can't afford the dividend, which is cool. And they just did 300 million of buybacks this quarter. I don't know. I kind of like it. I might like AbbVie more, actually. I love AbbVie. They're a beast. LLY. And he goes, yeah, speaking of kind of the pharmaceutical names, let's check them out. What up, Not Don? So Eli Lilly is probably the growth, is a growth monster. You guys aren't going to believe this. So if we go to their prescriptions right here, they sell a bunch of different prescriptions right here. So diversified. One of the main growth drivers has actually been Zepbound. This is their weight loss prescription. They created this in 2023 on the Ozempic craze, and it's just been super the triple-digit growth rate. It hits a new record every year, every quarter. They can just create these prescriptions and they just sell. Like Mounjaro, for example. Check out the growth. I mean, literally in 2022, the revenue was 16 million. It was zero. Now it's 3.8 billion, up 112%. So the growth has just been insane. We can just see the revenue. The revenue 17 billion, up 53%, and they 8.5 billion, or basically 8 billion of net income on that. So Lilly is a beast. They deserve. And they Zepbound, that weight loss prescription they made called Zepbound, just got added into Medicare and Medicaid for $149 a month for them. So pretty cool. That's, I think, the main reason why they've been rallying up so much, that kind of integration into Tyler said Apple stock. Yeah, we'll look at Apple and then DNN, Innodata. Hey, remind me to get to all those stocks here. And hey, shout out to Tot right here, the legend. I actually did not buy anything last week just because I was so busy, but there are two stocks I'm super looking to buy the dip on. CVCO and SGI. At the very beginning of the stream, I went over those in depth, and I'm actually going to make a YouTube video on them. But it's the company that owns Mattress Firm, and the other company does like small manufactured homes. Well, if you missed that, watch the very beginning of the stream. It's actually pretty fascinating. Incredible financials. But anyway, here's Apple right here. All-time high on Apple. So a lot of people are locked in the Apple ecosystem. You know, I'm on an Apple device right now. But they've been rewarded for not spending on AI. You know, Apple's always late to the game. Like Apple was super late to the smartphone game, but they out-innovated everyone and made the best phone. And they became the market leader. We'll talk about that in a second here, but look at this. iPhone is half of their sales. So iPhone is half of their revenue. The iPhone sales have kind of been flat since 2021. So the sales of the iPhone has been flat, but the most valuable part of Apple, the most high margin business for them is actually their services business. Basically, whenever you go spend $100 in the App Store, Apple keeps 30% of that. It's literally 100% margin royalty, developer fee, they call it. But this is the highest margin business for them. It hits a new record every year, every quarter. So for all the people that are on their iPhones, whenever they do something on the App Store, the iCloud, whatever, they get that money there. And then they, of course, sell wearables like the AirPods, the watches. It looks like that's down from a few years ago. Like the Mac sales, are those down as well? Look at that. That's so weird. Like their hardware sales, like the iPhones, the Mac, the wearables, let's see, even the iPad revenue, they are all down. Yeah, massively down from 2021, 2022. But the stock is at an all-time high nonetheless, probably just from the services business. And yeah, they do print net income. Oh, another reason propping up their stock is the insane share buybacks they do. You wouldn't believe it. So this company makes like 20 to 30 billion of net income a quarter, and they're not spending on AI. You know, Apple, Amazon, Meta, Google, Microsoft, they're all spending 10 to 30, 40 billion on AI every quarter, but not Apple. They're not spending a dime on it. And I think LLMs are going to be so commoditized where Apple's just going to pick the cheapest one. And they already did that with Gemini. They give Gemini, or aka Google, $1 billion a year to integrate it into Siri. But anyway, Apple, the best part about them is the share buybacks. They're doing 20 to 25 billion of share buybacks a quarter. And the dividend only costs $3.8 billion. There's so much room for future dividend growth, but they don't want to raise the dividend super high right now and suffocate themselves. They want to do is share buybacks, invest in the future. So yeah, smartphone. They also make smartphone chips now, smartphone chip market share. But yeah, the margins on their services revenue is much higher than their hardware. Hopefully that was helpful there. That's a great never sell name. Running up the, hey, what up, something? Look at channels, or hey, Campbell Soup. Hey, what's the ticker symbol? I've heard of them before. Campbell Soup. I think they own Goldfish. Give me the ticker symbol for them. We'll check them out, actually. So Steph said SoFi. Yo, I love SoFi. I am a shareholder of SoFi. Here, I'll show you that real quick. If you go over here to our Webull portfolio, we own 24 shares of SoFi. And this is one of my favorite fintech companies out there. They have their own banking charter. The valuation is still to buy meaningfully. It's tough because they trade at 50 times next year's net income. But this is the kind of stock that certainly deserves a high multiple, more so than a lot of other companies, because this is beating all expectations. If we go to their financial services business right here, check out the growth. This is what's insane. The revenue's up 76, after grew 101, after grew 222, after grew 440. Like the growth is just insane. And that's beating on all analyst expectations, which we can see down here. That's the orange line. Every quarter they beat on revenue, they beat on EPS, which is net income, and they beat on EBITDA. Like a triple beat every single quarter. So no wonder people are starting to take SoFi seriously. They're printing net income, easily over 100 million net income a quarter now. Growth is there. So I love SoFi. The valuation might still be a little too high, but I own them. I want to see them do good, and I regret every share I've sold of them. If I own them, like, and I do, but I wouldn't trim them, or really, I wouldn't take profits on SoFi. I think that's the kind of stock in the long run that's just going to continue to go higher. So, FTAI. So what is this one? So I think this is an aerospace. So, this is one of the growthiest aerospace and defense companies out there. Forward, that can't be real. And that would send the stock at a super fair valuation of 27 forward PE. We're just going to add this back to the top of the watch list. But check this out. If we go to their aerospace products, y'all aren't going to believe this. Hey, what up, Ivan? Good to see you. So their aerospace products, though, you can't make up this growth in the middle here. This is what justifies that crazy stock price appreciation. Sales are up 70 after grew 150, after grew 250. Literally in 2021, the sales were 7 million. Now it's 500 mil a quarter. And that's just one business. They also have their aviation leasing. Aviation leasing, I wonder what, that's interesting. But anywho, their aerospace product growth has been nuts, and they're printing over 100 million net income a quarter. Yo, no way, dude. Shout out to Rotongo. Hopefully I'm saying your name right there. But yo, Rotongo with the super cool glasses there. Thanks for that gift there, man. I appreciate that. If you got a stock you want me to look at, let me know there. I got you, brother. Yeah, FTAI is super cool. What's the best index fund to put my money into for long-term savings? In my opinion, be the S&P 500. Right? I think the ticker symbol for the index fund is .IJX. Just look up, or SPAXX is what. Anyway, if you want to buy the S&P 500, buy the S&P 500, and this is just an ETF, which is an exchange-traded fund. You're looking for a fund. This one's just a fund on an exchange, and it's the exact same thing with the exact same fee. You just buy VOO, breaks your money up for you into the top 500 companies in the U.S. NVIDIA, Apple, Microsoft, Amazon. You buy market cap. So yeah, most investors, retail investors, can't outbeat the S&P 500. So just buy that, and then you're good. It's super boring and super simple. Most people don't follow it because of that, but it works. It works the best. Disney stock don't really grow. Yeah, Disney. I do own Disney, by the way. We're up 23% on them. I bought them at the time because it was just such a cheap valuation. I couldn't pass it. It was down here. It was basically during the April dip. We did trim a little bit on them. But yeah, Disney, you're right. If we zoom out on Disney on the weekly, Disney is the same price as that they were back in 2015. But I bought Disney because of their streaming service play. I love their streaming service because it's printing the money. They just rose prices on it. They're taking stakes into companies as well. I like Disney, but actually I don't love Disney. I really shouldn't, for my age, I really shouldn't have known Disney. Maybe soon if I see a great deal somewhere else, I might sell Disney for another company, but they print money right now. Okay, NVIDIA. Oh yeah, NVIDIA. I'm so behind on so many stocks here. I'm so sorry. NVIDIA, and then like ALAB, Astera Labs. I love them as well. Oh yeah, and DNN. I think there's just Denshin Mine, just a gold play. Nothing really good. They've underperformed gold actually. Well, short term they've outperformed, but in the long run they don't actually keep up with gold for some reason. But here's NVIDIA right here. Let's check out them out. Phenomenal numbers. The super cheap. NVIDIA is cheaper than Walmart. Valuation. NVIDIA is literally cheaper than Walmart right now, but their numbers were great. Actually, there's no complaints on the numbers here. The sales were 57 billion. It just hits a new record every year, every quarter. If another company can pull off this sort of growth, literally where the sales were like down here, they were 3-4 bill a quarter. Now it's 50 billion. That's 200 billion a year annualized. And that's not, anywho, they're not just growing their top line. So 57 billion of revenue, The net income on that was 32 billion. That is insane. The margins on there, basically 56% net margins. That's after they paid, $3 billion of taxes as well. So I just really like Nvidia. They're taking stakes into a bunch of different companies. Now, the law of large numbers is hurting them. Like if we just look at the market cap, for example, Nvidia is worth 4.3 trillion. For you to double your money, they have to be worth like 8-9 trillion. But their valuation is starting to get attractive. But there's also like this AI kind of bubble, like the circuit, like part of their Nvidia earnings are saying like they're propped up on Iris Energy, CoreWeave, Nebius. It's in like a circular motion right here. They have a great GPU market share. They have this automotive software that Lucid and Uber uses. I like Nvidia. I do own. I actually own AMD. Just because I thought the double was easier on there, just because of the lower market cap, $350 billion market cap. Also, Google. Actually, one reason, if you're wondering why is Nvidia falling, it's because of Google. Google is like it's an inverse. Like Google is taking Nvidia's market share because of their new TPUs. Google successfully trained Gemini 3.0. Gemini 3.0 was trained solely on Google's own TPUs, and NVIDIA is considered spending billions on TPUs. A bunch of companies right now are spending so much on NVIDIA chips because they're trying to build their own in-house LLMs and stuff. Meta, Amazon, Perplexity, Google, and Google Gemini 3.0 is the best LLM. It's literally better than the best version of ChatGPT, and they trained it on Google's own TPUs, and that's why they don't have to pay the NVIDIA tax. They don't have to pay the CUDA tax of 55% basically net margins to NVIDIA. You can buy Google's TPUs, train your thing just as successfully. You still need some NVIDIA GPUs, but that's just what I've been hearing that might be one reason why. And Meta's considering spending billions on Google TPUs because they really work. Okay, so Google Class A is better. Well, that's just the voting, right? It doesn't matter which Google. Both are good. Okay, what's great? What up, ODB? Do you like crypto? I don't own any crypto. So I just like stocks better. I love the yields, the dividends, how stocks work, how they can do share buybacks. It's a piece of a living, breathing company. Here's kind of one thing I heard, like, I love Bitcoin. If I was going to buy a crypto, it'd be Bitcoin and Ethereum, those two and those two only. But like, here's what I like. Let's say you are the only shareholder of Apple left. Like you buy every single share of Apple, you're left with a company that makes net income and free cash flow and has brand value. But if you buy every single piece of Bitcoin that exists, you buy all the Bitcoin, you're not really left with anything. So I love companies that pay dividends, share buybacks. But crypto still does great. Actually, I'm the picks and shovels crypto play. I own the picks and shovels of crypto. What do I mean by that? I own Robinhood. I own SoFi. I own Futu. I own Webull. These are the crypto beneficiaries, the ones that are making juicy fees off people doing crypto transactions. That's actually why Robinhood stock is pretty much at an all-time high on top of their prediction markets. Robinhood makes crazy crypto transaction fees and also the new prediction market stuff. So Robinhood's cool. Webull, so they're cool. Anyway, I like crypto as well. I like Bitcoin, but I don't own any Bitcoin. Okay. Hey, David said TMUS. This stock is at a steal of a deal, I think. T-Mobile, kind of a commodity, cell phone service. You know what's genius? Does anyone see those Ryan Reynolds Mint Mobile ads? They're genius. Mint Mobile, T-Mobile owns them. They also have a bunch of stakes in other companies, but yeah, they literally trade at 19 times net income. And this is, if I was going to buy AT&T or Verizon, you'd way rather buy T-Mobile unless you just want a high yield. But here's what's so cool about T-Mobile. You still get a good yield, a 1.7% dividend yield. But the best part is actually the 3% share buybacks they do every year. So if you go to their net income, this is actually a slight one-time adjustment, but they had a one-time adjustment this quarter, making their net income look higher than it was. So the comps say it's down 11%. The core business wasn't actually. But look at this right here. Here's what share buybacks do for you. The net income is down by 11.2. Net income's down by 11.2, but the net income per share is only down by a freaking 7.6. So again, the EPS growth rate and the net income growth rate should always literally be the exact same. They should always be the exact same. The only thing that changes this is a share part of the ratio. So they've bought back 5% of the shares on top of giving you a 1.7% dividend yield. They're rewarding their shareholder like crazy at a fair valuation, a super fair valuation. Actually, here, if we go down here, We look at the dividend. They're making 3-4 bill a quarter, but if we go to the dividend only cost $987 million. How did it cost the dividend go down? See, the dividend used to cost $1.01 billion. How does it only cost $980 million now? That's because whenever you buy back your own shares, you don't have to pay dividends to those shares. They spend $2 to $4 billion on buybacks a quarter. That's what I love about T-Mobile. They're unlike Verizon and AT&T, who really suffocate themselves with the high dividend payout ratio. They have like 70, 80% dividend payout ratios, but not T-Mobile. Not T-Mobile. So they have leftover money to, do the Ryan Reynolds commercials and innovate and growth. They're going to be the growthiest telecom play out there, in my opinion. I love their numbers. Their numbers are just good. Okay. I like COP. Yeah, COP is a nice dividend play. AbbVie stock. Isaiah. AbbVie is one of my favorite healthcare stocks to just probably right behind Eli Lilly. Probably the best one that sells individual prescriptions out here. That's AbbVie right here. They own Skyrizi. The growth of Skyrizi is through the sky. I mean, check this out. It's up 50% after it grew 50, after it grew 50, after it grew 63. Just hits a new record every year, every quarter. This is a company with a crazy high dividend, a 2.9% dividend. I've looked at a lot of stocks with a 2.9% dividend. This is one, in my opinion, that's not just going to give you a 2.9% dividend, but also return you 4 to 5% stock price appreciation every year. This should give you not financial advice, even in a recession, probably 7 to 8% returns a year on average, even if you buy it right now. And super not financial advice here. Nothing in this is, I'm not an expert. I sell nothing. I have no course, book, Discord. Watch out for people impersonating me. But they really are quality. If we look at their right now net income, they've had so many one-time adjustments from these prescriptions, but if we go, they're making on average, $1.50 net income. The forward P is what you really want to look at. AbbVie trades, what's the forward P? A 26 forward P on AbbVie. You get a 3% dividend. That's totally safe, and I think it's going to keep up with the stock price appreciation. And we just looked at Skyrizi. They have so many other prescriptions here. We saw the growth on Skyrizi. It grows 50 after 50 after 50. They also have Rinvoq right here. Also just hits a new record every year, every quarter. Just look at the growth rates in the middle here. Humira. Oh, well, check out this one out. Humira. Check that one out. Down 55%, but their Botox acquisition was so good. Anyway, great company. What's this app? Oh yeah, hey, by the way, yeah, this is actually a brokerage right here where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, very first link there. Or actually all these brokerages, these are all apps where you buy stocks on. They're all in the link tree in my bio. Full disclosure, they're all affiliate links. So if you go and deposit $100, they'll both get some free stocks. But yeah, these are all in the link tree in my bio. This is my favorite one though. Lowest fee, cost nothing. Link tree in my bio, very first link there, a broker called Moomoo. So let's see here. Google Class C is just stock options. It's just the voting rights. It's actually it's the voting rights, I'm pretty sure. So let's see. Pfizer and Murphy dividends tomorrow. Credo. Hey, Credo Technologies. Actually, I made a post about them on my Moomoo right here. I didn't know this. Credo Technology actually is headquartered in the Cayman Islands, aka the Marshall Islands. They pay no taxes at all. So one of the reasons, first off, that doesn't matter. The reason the stock is doing so good is because the business is doing so good. Super good. The revenue's up from 70 to 270, and they're printing 63 million net income on that. It's because they pay no taxes. That's one of the reasons why they're doing way better than their competitors, because they don't pay taxes. But their products are in such demand. I mean, it's crazy. Just from the whole AI infrastructure boom, Credo Technologies enters patent license agreement with Siemens for active electrical. Oh yeah, Siemens Electrical has a pretty. Oh, so Siemens transferred. The terms of the agreement are confidential, and both companies have expressed satisfaction with the deal. Anyway, maybe Credo bought their patent out. Who knows? Siemens Electricity is also publicly traded. One of our switch gears outside are Siemens. They're a European stock. I wonder if I can find their weird ticker symbol. They have a really weird ticker symbol. They're on my watch list, but I don't remember their. Yeah, I don't care. Okay. Let's see here. SoundHound. Hey, what up, Dennis? So this is one of those audio subscription companies. I've actually checked out their website. Basically, you give them a bunch of your voice's data, and you give them a bunch of data, and then they can replicate your voice in a way that doesn't sound AI. Now, it still sounds AI to me, but their subscription revenue has just boomed. I in the long run, I don't know if I'd really own this one, but as long as they keep up the subscription revenue, this is real insane. This is the whole reason I'm even talking about the stock, because they have the real subscription numbers. Look at this. The revenue of their subscription used to be $600K a quarter, big nothing burger. But now look at the growth rates in the middle here. They're doing $33 million a quarter. Subscription revenue usually is all reoccurring, annualized. So I'm so curious to see what's going to happen there. So yeah, the revenue. Yeah, so the revenue's up 63%. That's been beating expectations. Analysts last quarter expected 32, they did 42. So they've been beating on expectations, but losing more money than expected. Yeah, dang. If we go to their net income, it lost 100 mil, 70 mil. I would be careful with that. But yeah, I don't know really. Yeah, they're not expected to make any net income for the next year. You're buy them for their subscription top line growth there. I would not have that as a big size position. Hey, what up, Lulu? Okay. Um, uh, let's see. Hey, yo, Young Zell, thanks for the gift there. And yo, actually, shout out to Jack. No way, dude. Jack with the bubbles gift there, dude. No way, Jack. I really appreciate that. If you got a stock you may look at, please let me know, Jack. I got you. But Young Zell, thanks for the gift there too. He said EVGO. What is this one right here? EVGO. So, yikes, the stock has not done too well. Let's go look at their fundamentals or their financials because that's what matters here. Or what industry are they in? EV charging. Oh no, I don't love the electric vehicle charging companies because it's such a commodity. They don't really make any margins on it. But it looks like, yeah, some electric vehicle charging play. I mean, like Tesla's kind of like a huge competitor to them, just Tesla and their own charging network. But let's go look at their numbers right here because that's what matters. I expect them to lose a bunch of money. I lost a ton of money on ChargePoint. So yeah, if we go to the revenue right here, actually look, the revenue growth is good. The revenue's up 36%. After it grew 92, after it grew 230, after it grew 70. So yeah, they're on a streak of growth. And, they're going to be making like 100 mil of revenue a quarter. It looks like they are still losing 30. That's not even that bad, though. They're losing 30 mil in net income a quarter. Or what's the market cap on this company? Yeah. Oh, I didn't know it was just $1 billion. So the whole company is worth 990 million. So when you're only worth 990 million and you're losing over 100 million of net income a year, that's pretty devastating. They're losing 1/10 plus of their entire company just in net income every year. And again, when they get profitable, I don't even know how much net margin they can even juice out of just selling electricity to cars. So I kind of feel bad kind of bagging on the stock here, but I don't know if I'd own that one, or certainly not as a meaningful size position. All their competitors are doing terrible as well, like ChargePoint, Blink Charging. Yeah, I'd rather buy them than ChargePoint. They're like ChargePoint. They're worth $191 million. And look at this. They're burning through heck in net income right now. 100 mil or 60 mil, 50 mil, 200 mil. So yeah. Hey, try not to spam the hold on here. I got to hold on there. What's this app? Yeah, hey, again, if you want to get this app, or this actually is software where you buy stocks on, it's in the link tree in my bio, very first link there. It's affiliate link too, full disclosure. So if you go and deposit $100, we'll both get like some free stocks right here. Does EVGO pay dividends? Well, I'm going to pray they don't because they certainly can't afford to pay dividends because they're losing 100 mil a year. Yeah, they'd be, that would be, okay. Okay. If you, okay. Manchester United reports earnings on Tuesday. Actually, we can see the earnings report right here. If we go to my watch list real quick. So yeah, CrowdStrike on Tuesday, we get CrowdStrike and Marvel. Wednesday, we get Salesforce, Royal Bank of Canada. And then on Thursday, these are just on my watch list. There's obviously a lot more, but some interesting names there. Okay. Hey, and Luffy, I saw you earlier. Wait, didn't you send a rose? Yeah, Luffy, what up, dude? My bad there. Did you have a stock you want me to look at earlier? Do you like Iron more than Nebius? To be honest with you, both I don't love. But I think I like Nebius more. I don't know, though, because... Actually, wait, let me check out Iris's operating profit. I actually might like this one more. Because, see, they're actually making money, but I think it's still from Bitcoin mining. I wanted to find that news here because I'm pretty sure when they reported earnings this quarter, it was like out of this 240 million of revenue, over 200 million of that was proceeds from mining Bitcoin. So I think this is still a primarily Bitcoin mining company. But they're slowly transitioning. This is what I love about Iris and a lot of these other ones. They're slowly transitioning into like cloud computing hosting businesses. Like Iris Energy and Microsoft signed a $10 billion deal. Actually, Microsoft signed a $16 billion deal with Nebius because the Microsoft Cloud, they don't want to own that liability. They put it on Iris Energy and Nebius. So these companies are in such demand. Like no joke, the revenue growth is insane. I lost. It used to break it. I had a metric where it used to break it down, but I'm pretty sure like 240 million or out of their 240 million in revenue, like 200 million of it was their Bitcoin mining revenue still. Okay. Craig said Yum Brands. This is like my second favorite restaurant play because they know how to, they copied McDonald's successful business model. You know who didn't copy McDonald's is Wendy's. Look at Wendy's right here. Wendy's stock is at an all-time low, or they're lower than they were in 1997. You know, same with Jack in the Box. Jack in the Box is at an all-time low right now. A lot of these restaurants are struggling hard. Like DNUT, which is Krispy Kreme. Sadly, the stocks are like an all-time low. They're only worth 700 million, losing 100 million plus a year. So, but one of my more favorite plays, but right behind McDonald's. If I didn't own McDonald's, I'd probably pick Yum Brands. They are the people that own KFC, Taco Bell. You know, I love Taco Bell. I love KFC. So, and they do the royalty franchise model that McDonald's does. And I own McDonald's right here. If you didn't know, it's really a real estate and royalty company. McDonald's does it the best. If you go spend $100 at any McDonald's, they keep $4 of that. And also as a royalty, a sales and marketing royalty, because all the franchises benefit from McDonald's doing a ton of advertising and stuff. They also own the land under 80% of all the stores. So every franchise is also a tenant who pays rent back to the parent company, which is so cool. I didn't know that. And that's why they're also recession resilient. Like McDonald's didn't even fall in 2008. They were the best performing stock in 2008. In a recession, McDonald's acquires cheap land. Like they do everything so smart. Anyway, yeah, Yum Brands, they print money, 300 to 400 mil a quarter. How much does their dividend cost? Let's see for fun. Dividend cost, 197 mil a quarter. So cool. That's KFC and Taco Bell stock. They actually used to be owned by Pepsi. So Pepsi used to own Yum Brands, but they spun them off. And that's why if you ever go to KFC or Taco Bell, they only serve Pepsi products. Have you ever noticed that? And kind of like Pepsi owns Doritos. And that's why there's Doritos, Taco Bell stuff. And they only serve like Mountain Dews and stuff at Taco Bells and KFCs because they still have a lifetime partnership with Pepsi to only sell Pepsi products. Kind of cool. Anyone know that? Okay. What's your take on yield max ETFs in the reverse? But yeah, I would not own any yield max ETF, really. Those are covered call ETFs. I always recommend selling calls yourself, and then you'll realize why these stocks are then at all-time lows, because these ETFs, it's just simple math. It's a slow bleed of your capital. And that's a sad truth, because most people don't know this. There's an NAV erosion, return of capital, and the 1% plus expense ratio fees. First, this is a 1.3% expense ratio. First off, this ETF, and even respected covered call ETF holders admit this, no matter the ones, in the long run, these covered call ETFs do not outperform the S&P 500's 8 to 10% CAGR. So if you can't beat the 8% CAGR and you already are losing by a 1.3% to expense ratio fees, and when they return capital to you via return of capital, it crushes your future dividend income. So I would not, and look, this yield max ETF, it's literally just an ETF that owns all of the covered call ETFs that they own. So, and when you blend all those together, it's at an all-time low. So you're buying this to maximize your dividend income in the short term. It's not as literally just math. The dividend income you will get will trend down and go down by double digits every year. Even if you reinvest the dividend, your dividend income will go down by double digits every year. Sadly, I could not recommend any of the covered, or there's some better covered call ETFs out there. One of my more favorite ones is JEPQ. This one sells calls on the NASDAQ, so you get a 10% dividend, but you're buying that to maximize your income. You're not expecting to outperform the S&P. What's the best monthly paying dividends? Well, there's only two monthly paying dividend stocks I'd really ever consider. Main Street Capital is one of them. They're a BDC, and they've actually done quite well. Look at that. This doesn't even include the dividend either. This one pays a monthly dividend. It's a BDC. They do first lien loans, second lien loans, and they own like preferred equity in their stocks as well, and the people they lend to as well. So it's they're one of the companies that actually have to, by law, pay out 90% of their taxable income in the form of a dividend. Same with REITs, which is Realty Income. Realty Income also pays a 5.6% dividend, but they're lower than they were. The stock is lower than they were in 2019. So Main Street Capital is like the only stock I've really seen that actually keeps up. It still underperforms, but actually does decent as a monthly payer. What up, Celery? Said, forgot to say that NUTX had negative ETS, stock-based compensation. Yeah, let's check it out. NUTX, let's check the stock out. So someone said the reason their net income went negative is because of stock-based comp. So that's why I really love GAAP EPS and GAAP net income. Wait, let me see what it was on Webull, because sometimes they exclude the one-time adjustments from that. So yeah, okay, so look at this. Or wait. Q2. Oh, so you're talking about last quarter. Okay, so last quarter. So anyway, whenever you have stock-based comp, it's not included in free cash flow, but it is included in net income. Also, that's why you don't always look at cash from operations, because this doesn't include stock-based comp and non-cash expenses. But I do like looking at cash from operations because it does include all the, like, if you have negative debt interest payments, it includes all the negative interest expenses you paid. You got to just blend every metric together, in my opinion. The free cash flow, cash from operations, net income, operating profit. There's so many metrics that are important to look at. But anyway, yeah, this growth looks great. I don't know what this company is, but check out the growth here. Incredible. Revenue's up 3x year over year. They did $100 million in net income on that. Yeah, look at the cash flow, $100 million. Yeah, so it looks like they didn't buy a company either to get that growth. That's all like organic growth, a hospital division. So anyway, pretty cool. Actually, I wonder if they're okay. I'll get so a bit. I don't know, ethic point of view. I do own a for-profit hospital group called HCA Healthcare. Actually, when I was just in Florida, I saw a HCA Healthcare hospital. They have like their own like ambulances. They have their own like they're pretty cool. You know, I think everyone should always have the choice of going to an expensive hospital. Anyway, HCA Healthcare, one of the best stocks I've ever seen. Okay, let's look at Pepsi. You know what? We just looked at Yum Brands. Let's look at Pepsi now. I honestly wish Pepsi kept Yum Brands just because of how they're, I love that business. Okay, but anyway, here's Pepsi right here. The stock has not been doing too well because the growth has slowed more than analysts have thought. Look at this. The orange number, that's their net income per share. They've missed on net income every quarter for the past 3 quarters. If you go to the revenue right here, the revenue's up low single digits. You know, it's up 2.61. It was just then -1, -2. You know, actually, it's up 2.6% year over year. If you add inflation to that, like it's basically flat. Like the revenue didn't actually grow when you add inflation to that. And look at this. So the revenue grew 2.6, but the net income fell by 11. So their margins are being squeezed a bit right now. But basically, it's a nice dividend play. You get a 3.7% dividend. I think Pepsi, it should be strong enough. I love their brands. I love the Frito-Lay business. And they're also now bottling for Celsius. And Celsius, they took a 7% stake in Celsius, gave them Rockstar Beverage. I like that they own like 8% of Celsius now. But yeah, organic sales growth, it's been low. Again, probably just because you can't raise the price of a bottle of Pepsi or a can of Coke to like over like $3 or what depending on the location. Like there's only so much pricing power people will pay for a bag of chips and a can of Coke, you know. Okay. AG&C investment. Yeah, those actually, Rob, I've looked into both of those. These are also two, I think those are two of the more worser monthly paying dividend stocks. But yeah, here's AG&C right here. This is what do you call this? A BDC, a business development company. And look at this, they have a 13% dividend yield. You buy this to maximize your dividend income, but if you kind of look at the chart, like, dang, this was like 2014, this was $20, now it's $10. Anyway, these never outperform, but you buy them to maximize your income. Let's see what the net income is. So net income's a little choppy here, but did they really make 800 mil, or does it tell you because of how this company is? Anyway, agency, it's not, I don't know. Hey, what up, Aaron? Yeah, honestly, I'd rather own a covered call ETF than, actually, we just looked at, hold on there. You just said BIZ, or you just said 2 BDCs. I have a very cool ETF for you. This is the whole BDC ETF right here, ticker symbol BIZD. You know, lower than it was in 2014, just like that stock we just looked at. But this ETF, you know, this doesn't include the dividends that it pays. So here's what I'd probably recommend buying over that. You just buy the whole BDC ETF. You get an 11.7% dividend. And it just breaks down all your money for you into the top BDCs out there. Like, yeah, Ares, this is the best BDC. Right behind Main Street Capital. Ares Capital, Main Street Capital, Blue Owl Capital. Blue Owl Capital is the one supplying $30 billion for Meta for their Prometheus data center. Main Street Capital, I love Main Street Capital. I actually really like BXLS as well. I used to own that one. Owned by Blackstone. But anywho, probably check out the BIZD ETF. Hey, what up, huh? How's it going, man? So try QSR. That's another one. I think this is Burger King right here. QSR, quick service restaurants, kind of like their ticker symbol. Yeah, they're the same prices they were back in 2019. They've definitely underperformed Yum Brands and McDonald's by a bit. But yeah, Tim Hortons. So check this out. Tim Hortons is their largest kind of revenue source here. Then they also, they got Burger King 15%. You know what's so sad? Every time, like I go to this spot where there's like a Burger King and a McDonald's and like a Arby's, like the McDonald's is like triple packed, and then the Burger King and the Arby's are always like completely empty. I don't know why. Anyway, I'd rather buy McDonald's, but I like how they also own a bunch of other brands like Restaurant Holdings. I don't know what other kind of restaurants they own, but yeah, they're still printing money. Look at that, 200 to 400 million of after-tax net income a quarter. Not too shabby. Couch Marathon. Yeah, hey, Marathon, I would never really recommend this stock. You know, I've looked at, and I'm not picking on this one, of course. I've looked at every single Bitcoin mining stock out there. You know, CleanSpark, Hive, Hut 8, Core Z, all of the Marathon right here. I've looked at every single Bitcoin mining stock out there that exists, and not a single one of them has even come close to keeping up with the actual price of Bitcoin. So there's just no world where I'd really ever recommend like any of these Bitcoin mining companies over actual Bitcoin. And again, it's not just them. You know, let's pull up any, like CleanSpark right here, the most popular one. Look at that. It looks just like it. You know, Bitcoin is massively outperformed. You know, Hive, Hut 8, you know. But some of these Bitcoin mining companies are converting into data center hosting companies like Iris Energy. They're converting their GPUs into just mining Bitcoin into now server hosting, which now 10 billion of the Microsoft Azure cloud is on their servers now. Okay, hey Ronnie, thanks for the subscribe. I appreciate that. Yeah, if you guys want to hit the follow button, subscribe button, we actually stream every single day. Sometimes twice a day. I sell nothing. I have no course, book, WhatsApp. I'll never follow you, DM you, nothing like that. Yeah, watch out for people impersonating me. Hey, what up, David East? Good to see you. Look at a Zim. Yeah, hey, this is a shipping company. You know, this really benefits from all whenever there's supply chain issues, like there was in 2021 when the price per cargo container ship was like, it was normally like $800, and then it went to literally $8,000, $5,000. So because like the Red Sea, Panama Canal being shut down, or because of the wars, something like that. But this company specifically has a rule where whenever they make net income, 50%, always, whenever they make net income, 50% of that net income goes to the shareholder via dividend. So that's why their dividend actually changes every single quarter. You know, 30 cents, then it was just 6 cents, 74, $3. But check this out. Whenever in 2021, or 2022, for the full year 2022, they paid you $27 in dividends. Literally, the price of the stock today is $20. They literally spent, what's the market cap? So the whole company right now of Zim is worth $2.46 billion. That's kind of sad actually. They paid out $3 billion in dividends that year, which is now, they paid out more in dividends that year than now the whole company is even worth. I really wish they kind of did retain some of that money, but I don't, are they headquartered in the USA? I wonder. So no, they're headquartered in Israel. I don't know if there's any weird text, but anyway, supply chain. There's another one I like, but I'm going to forget the name. Nah. I forget the name of it, but yeah, that's Zim. Because actually, if we go back to Zim super, super quickly, last thing about this, they're so cyclical. Like sometimes they don't make net income. If we go back down here, like look at 2020, like whenever they were losing all this net income every quarter, they didn't pay dividends those quarters. So yeah, the net income was only 23 million this quarter. Or so, I don't know. There's Zim for you. Okay, let's see here. I've lost someone said F Bitcoin and Ethereum. I've lost a small fortune on them. Dang, I'm sorry, Willie. Yeah, you know, I actually don't own any crypto at all. My favorite, I do like Bitcoin and Ethereum. Those are the only two I'd really recommend. Maybe some other ones in the top 10, but I literally don't own any crypto. I really wouldn't recommend that as most of your portfolio. Like I want to have most of my assets and my stuff in like stocks. I love stocks, and all my Webull, Futu, Hood. These are all like the picks and shovels play for crypto. Like whenever you go do crypto transactions on Robinhood, Webull, they make a good transaction fee on that. And so I buy those stocks. It's kind of like my way. For the longest time, Robinhood stock literally performed like exactly with whatever Bitcoin does because Hood stock did. But ever since Robinhood added in like their Robinhood Gold subscription, the prediction market stuff, they've really out-tethered that and have just been rocketed higher. Okay. Someone acting as you. Yeah. Hey, Vacay, thank you for telling me that. Yeah. Please watch out for people impersonating me. Just know I literally sell nothing. I have nothing at all. I have no course, book, WhatsApp. I'll never follow you or DM you. Yeah. Please watch out for people impersonating me. If you hit the follow button, I really appreciate that. But sometimes you get followed back by someone that's impersonating me. It's not me. Not in a mean way. When I say I won't follow you back, not in a mean way, but you know what I mean. Watch out for people. Okay. Okay. Looking at Symbiotic, what's your opinion? Yo, Jim, what up, dude? Yeah, Symbiotic, this is my second favorite robotics play out there. This is a pure robotics play. My first favorite play would be Amazon, but obviously not pure robotics. I've looked at they're so cool, but Symbiotic is the second best beneficiary because who benefits from robotics? It's companies like Amazon and Walmart. Even if they don't have the robotics themselves, they benefit from it from the warehouse logistics. So Symbiotic is specifically a warehouse logistic company doing robotics stuff for Walmart logistic hubs. If we look at this right here, Walmart loves them so much that Walmart owns 13% of all the shares. Yo, I'm nervous for the market there too, Gio. But yeah, Walmart owns 13% of all the shares, and this company has over 1,500 registered IP and patents. Like they have real revenue, 600 mil a quarter. I mean, that's $2 billion a year. So I really like them because Walmart they're aligned with like Walmart wants them to do good because they're a shareholder. So let's see, Symbiotic is the backbone of commerce. I've looked at their investor presentation before. Hopefully I'm not okay, bro. What's it trying to pull up a video for? Anyway, they have like this cool, anyway, they have real revenue, real patents and stuff. I really like Symbiotic. Amazon's another good one. Okay. Yeah, sadly, Rich Tech Robotics is complete junk. No IP, no patents on this one, no revenue. This is just some speculative robotics play. Don't touch this one, in my opinion. Look at the revenue. I mean, the revenue's $1 million, and the revenue's down 18% year over year. Like the revenue is slightly higher. So this is some trash momentum-y robotics play. You buy this maybe for the momentum and swing trade it. You're not buying this as a real robotics play, in my opinion. You leave that to Symbiotic and Amazon. And like a Teradyne maybe. Okay. Hey, what up, Jason? What about A star? Hey, Jason, what ticker symbol was that again? Yo, Jason, give me that ticker symbol again, or what stock you talking about there? That thing. Ooh, RCAT right here. This is a drone play, actually. Check this out. So this is Red Cat Holdings. They actually have their Black Widow drone just got NATO approval. Let's see if there's any news on this company. Probably not. No. Okay, so Red Cat Holdings, is there like an earnings something? So let's see. Defense segment expanded with a 35 million Black Widow drone contract and NATO approval. Literally, I promise you, I have not read this AI earnings takeaway ever on this company. Okay, and it's saying the same thing, NATO approval, Black Widow drone, launched Blue Ops Maritime Division focusing on uncrewed surface vessels, opening up new revenue streams. So anyway, looks like NATO members can order their drone systems and stuff like that. So yeah, right now the revenue's not too good. If we look at this quarter's revenue, it was only 9.6 million. But check out what the analysts are expecting. If you go to revenue right here, literally next quarter, and they beat expectations on this quarter, they're expecting 21 million next quarter. And the quarter after that, 24 million. There's so much future growth expected for the next 6 months specifically. So if I was a shareholder of Red Cat, buckle up because the next months are going to be super volatile, I think, as they finally get to some real revenue. Really great balance sheet. This is mostly from diluting you as a shareholder, but they're kind of doing the smart thing. They actually diluted you by 165 mil, but they fortified their balance sheet. Are they losing money every quarter? So yeah, they're losing. That's nothing. They're losing 10, 20 mil a quarter. And they now have, 165 mil of extra cash. So they have years of cash on hand they could burn through. Anyway, small company, $885 million. I wouldn't have it as a huge size position, but certainly interesting. I might get some Symbiotic on this little bounce down. Yeah, they're still not profitable yet, but I really love Symbiotic. ACHR. So this is I don't love these kind of stocks, sadly. Do you only follow on companies that are up? Or no, hey, Lemon, no, we haven't looked at any stocks that are up like 200% year to date, I don't think. But yeah, we look at all kinds of stocks. But we don't really look at the microcaps. Like if you have a stock that's worth under like 100 million, 200 million, don't comment it. We won't look at that. But here's Archer Aviation. Sadly, this is a story play. Like I can't, these are just the stocks that I can't buy. There's so many stocks out there that I'd rather pay their market cap and valuation for. But if we go to this company's revenue right here, it says no data because this company is a startup. They've never sold anything. They've never sold a product or a service. They've never sold anything. And if we go to their net income, they're losing 100 to 200 million of net income a quarter. So that's the reason I can't buy this stock. $5.7 billion company losing 600 million net income a year. If you're wondering, like, they have no revenue and they're losing $600 million a year. Why is their balance sheet so good and how are their assets growing? You guys wouldn't believe this. They've literally diluted you by over 50% in a year. It's insane. Stellantis, which is Jeep, Dodge, they are the largest shareholder, but this is not a stock I'd at all consider owning. Not even with maybe a little bit of money, like or maybe with the slot. I don't even think so. Yeah, I don't know about them. Didn't Red Cat lower their guidance for the next year by over 40%? Hey, maybe wait, RCA. I didn't know that. That'd be a good. Maybe that's why they have been falling from their peak there. Let's see. Yeah, hey Charlie, I wonder if that's true. Thoughts on QFIN? What is QFIN? What's this one? QFU Technology. So this is an ADR. They sound like like an ADR. So they're a $2.5 billion company. Let's go check out their financials. So yeah, they're a Chinese company. Will convert the currency from Chinese yuan to USD. And so yeah, all of the revenue does come from China. But let's see. They are making good money though. If you go to the revenue's up 17, and the net income is easily 200 million plus of after-tax net income a quarter. Well, actually, we can't see the tax they pay, but they're making 200 million net income a quarter, which is great. So yeah, if we go to their valuation, what was the PE? They're trading at 3 times net income. I know there's a lot of fintechs. Well, so the yield must be good. Whoa. So hold on here. You get a 7.5% yield, and they only have a 20% payout ratio. That's yield. So whenever a company has like a 3 PE or something, they can pay out like a super small amount of their earnings, and it has a crazy high yield. So kind of like Build-A-Bear Workshop or something. So that's what I actually find intriguing about them. Like they can easily afford that dividend, and it's a high yield. Hey, yo, shout out to Ronnie or Label Brand on the YouTube stream. Dude, no freaking way with the 25 Ron for the coffee. Yo, I'm going to get some coffee after this. Yes, sir, dude. Thanks so much for that gift there. Yo, if you got a stock you want to look at, Label or Maddie, let me know there. I got you, dude. Thanks for that super chat. I really appreciate that. So here's Baba right here. Yeah, Baba, this is like your Chinese Amazon play, but they're getting into other industries now. Like they have like a Alibaba Cloud. They're getting into GPU productions as well, like TPU production. So we'll convert the currency from Chinese to USD. So another Chinese company. But yeah, they own Alibaba, that huge e-commerce company. It's more business to business. Amazon's more business to customer, but they're more business to business. Like people on Shopify buy a bunch of stuff in bulk off Alibaba, then sell it. But yeah, then they also have some other business like their Cloud Intelligence Group. Look at that growth. It's at a record. It's never even been it's never even been over 5 billion before, and they did 5.6 billion this quarter. So that seems a lot of growth. Actually, the net income struggled hard this quarter. They barely were profitable, but maybe it's because they're investing so much into the future. I know they're also getting into that GPU, TPU production because China, they spent 10 billion this quarter on some sort of investment, but China no longer allows or won't allow you to buy NVIDIA chips. So they're filling in that void by making their own chips. Or so I heard. But yeah, they're interesting. Actually, they pay a dividend too. Eric said SMX stock. What is this one? SMX? Security matter. Yeah, we won't really cover this company. If you look in the top right, they're only worth $60 million. They're at an all-time low. They just did a reverse split. Let's see, net income. So yeah, here's why this company deserves to be at all-time low. Like think about this. Like let's say you buy the whole company. You buy the company for $60 million. This is what you're buying. You're buying a company that lost 25 mil, 35, 10. Like the reason the stock is at an all-time low is because there's real bankruptcy risk there, and they have no sales of anything. It looks like. Let's see here. FAA announcement. You're talking about Arch Aviation there on some FAA news. Okay, my personal plan holding CoreWeave, Plug, BBAI, Neo. Those are Lemon. Those are all really risky. Those are all, but they're all really growthy. Or in terms of like growthy kind of stocks, but I don't know about Plug Power and BBAI and Neo. I don't know about all these ones because Plug Power is pretty. Here's the thing. I can't trust this one. I've looked at all kind of like the EV charging stocks, like $2.8 billion market cap. Here's the tough thing. Go to their net income down here. Here's why I can't trust this name, sadly. If you go to their net income down here, sorry, my Wi-Fi just wants to be slow today. Okay, failed. Okay, bro, really? Okay, it's just, okay, there we go. They burned through net income. 360, 220, 200, 1.3 billion, 200 mil. Literally just for eternity, this company just burns through net income. So that's why in no world would I really trust this name. There's real bankruptcy risk here. So yeah, that's okay. Let's look at some other ones here. Noodle and Company. What is that? Yeah, if you give me a ticker, maybe we'll check that one out. But yeah, let's see. Leave China stocks alone. Someone said, yeah, they usually trade at low multiples and just don't keep up with the America's market because they're unfavorable regulation and stuff. So yeah, here's another one we really won't cover. If you look in the top right, they're only worth $10 million. So we're looking at a company that's worth $10 million. So actually, this is cool. They're in waste management services and golf-related operations. Huh. That's kind of funny. But looks like they are barely profitable now. I mean, it's a $10 million company. So focus on the operation and management of golf courses related to country clubs. Okay. Very small company, but I don't know. There you go. It was a mistake. Red Cat lowered 2025 guidance from 185. Oh, okay. Hey, what up? So, Art said DUOL. Yeah, Duolingo. This one, I think they had a good week last week, or they recovered off their bottom there. Yeah, they went from 160 to 190. So, yeah, Duolingo is still a little expensive. You know, they're trading at 42 times next year's net income. Why am I looking at next year's net income? Because if we go to their current valuation, it is kind of propped up on a one-time adjustment here. But I love everything about Duolingo. Like that one-time adjustment aside, I'd still buy this company. Incredible financials, incredible fundamentals. Come on. I'm so sorry. My Wi-Fi is really slow. And sadly, I'll be live for another 30 minutes. So don't worry. So check this out. Actually, let me just pull this up here. This is a subscription model play. You buy a Duolingo subscription to learn a language. This is a language learning app. But one of the reasons why Duolingo stock has been getting whacked is because of the AI thesis and a back to reality of normal multiple. But there's increased competition now from OpenAI and Google, who are creating their own language learning apps for free. Like I was on the chat the other day and someone was like, dude, yeah, I just canceled my subscription for the OpenAI one. So I don't know, but the thing is, that's not affecting their numbers. Their numbers are phenomenal on Duolingo. Revenues of 45, after grew 48, after grew 45. Like this is their subscription revenue. Their subscription revenue growth is nuts. That's why I love Duolingo, and I'd certainly look into them. I put them on the watch list. And if you don't pay for their subscription, you actually see a bunch of ads. So if you go to their advertising revenue, check that growth data. It's up 45, 55, 40. So both businesses are headed in the right direction that I love. But yeah, if we go to their current net income, it says they made $292 million net income this quarter. They only made they had a record net income this quarter though. They actually made $35 million. But that's why we're looking at the next year's multiple because their right now multiple is kind of propped up on that. But record profits, deleveraging the balance sheet. Look at that. So as you know, whenever you pay off debt, you got to pay that with cash. So liabilities go down with assets. So you always focus on the orange ratio line right here. So they've completely deleveraged. Liabilities used to be 64% of the assets. Now it's only 30%. Everything in Duolingo is headed in the right direction. It's just the sentiment that's hurting Duolingo, and it's 42 PE. That is still expensive, but with that subscription growth that they have, they deserve that sort of PE. Anyway, they're on my watch list. I'd love to get them maybe around 150. If they might not go there. They might not go there. What happens is, hey, if you want to get this app I'm on, this actually a brokerage. They ask for a bunch of information and stuff. If you want to get it, it's in the link tree in my bio. Very first link there. Broker called Moomoo. Yeah. It's an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get some free stocks there. So yeah. Do you go live often? Yeah, we actually stream every single day. By the way, all these apps are all in the link tree in my bio. Not sure which one you're talking about there, but yeah, we're on that brokerage because it's the most useful one to actually analyze stocks on. So yeah, we also have all these other brokerages. But yeah, we got Robinhood, Webull. They're all there. They're all the apps are in the link tree in my bio. Okay, let's see here. Do Tractor Supply. What up, Ben? Yeah, what's that? Is it TSC? Oh, it's TSC. Oh, there it is. So Tractor Supply Co. They actually, their business model, I was reading a story about them. So here's how they get their best employees. Literally, the people they hire to run the stores and the franchises and stuff, they literally recruit their most repeat and often customers. Literally, the people who go to their Tractor Supply company the most, they go to those tractors and say, hey, we'll pay you more than your farm ever did if you come and work for us. I don't remember exactly, but some cool story like that. But anyway, I love this company. They make good net income. Check this out. Easily 200 to 400 million of after-tax net income a quarter, and they pay a dividend. So if we go to the dividend, you get a 1.66% dividend yield. And check this out. What's the multiple? What's the PE actually? The PE is a 26. That's pretty fair. 26 PE. That's like S&P 500 multiples. So yeah, livestock and agriculture. So this is honestly a bet for agricultural crops, commodity inflation. If there's inflation, they should benefit. Companion animal. I don't know what that could be, but that's interesting. I like how diversified that they are. Seasonal recreation. Oh, companion animal, like a tractor that hooks onto a horse, or I have no clue. Truck, tool, hardware. Anyway, clothing, gift, and decoration. So anyway, I do like Tractor Supply Co. John Deere's another one I love. I actually maybe rather buy DE, but I really like them. Does Moomoo have LSE stocks on it? Or give me an example when they should, yeah, or I don't know. Wait, LSE, is that like I don't know, Brian. French said SWK. Let's check out, was that Skyworks or, Stanley Black & Decker. So I believe this is actually a dividend king. So they've been raising for dividends for over 50 years. Oh, hey, actually Ben said this. They do pet services like a pet store at their bigger stores now at Tractor Supply. Oh, that's pretty cool. So here's Stanley Black & Decker. The stock has done terrible, sadly. Their stock is the same price as they were back in 2011. So let's go see if we can figure out what happened to this company. Let's just go to the revenue down here. So revenue, the sales. So yeah, it looks like the growth is gone. So the revenue's up 0.1 after it fell 5, but that doesn't beat inflation. So the revenue's just been, yeah, look at that. So the revenue, oh my goodness, I'm messing this up here. So the revenue is up 0.1, but that's after it fell 5, after it fell 6. Dang. So yeah, they've just been on a streak of declining sales for a while. They're kind of probably just being out innovated by like a Snap-on. Ooh, I'd probably much rather buy a Snap-on stock, even though that stock's at all-time lows and Snap-on's close to all-time highs. I'd maybe rather buy Snap-on, but I don't remember their ticker symbol. So I'll type it in. SNA, it's right here. Check out Snap-on. They also sell those same tools, like Stanley Black & Decker tools, but they also, they also have a great dividend, a 2.5% yield, safer payout ratio. Okay. What are your thoughts on the next Meta scheduled report? Yeah, that's a long ways away, but I am super excited for it because one of the reasons we're going to be watching for Meta is how much they're spending on AI. That's one thing being super questioned by Meta is will they get real returns on their AI spend? And they're kind of super behind. Like the Meta LLM, like Llama, sucks. I mean, ChatGPT, Gemini, they've really taken over. Gemini has over 700 million monthly active users. I think ChatGPT has 800 million monthly active users. But here's Meta right here. If we go to their cash from investing activity spend, they can afford they're making 30 bill a quarter, but if we go to their cash from investing, they legit spend 20 to 25 billion a quarter on AI and investments in GPUs right now. When they used to spend like 6-7 billion, a reasonable amount, but that's what's being questioned right here on Meta, but they can afford it. That's what I love. Also, another thing, their net income fell to 2.7 billion. This was a complete one-time adjustment from the big, beautiful bill tax charge. The operating profit, the real business, when you exclude that one-time tax adjustment, record quarter, record profits for Q3, record sales that quarter. I love Meta. They have what was their daily active users again? Like half the world is on one of their apps a day. Check this out right here. Active users on Meta, 3.54 billion daily active users on Meta. They own Instagram, Facebook. Yeah, they're family of apps. They have Threads. Threads now has the same amount of daily active users as X does. So pretty crazy. David said, Reddit, please. Yo, I love Reddit. Still a too expensive valuation to buy here. Yeah, 58 times PE. This is the stock that kind of deserves this PE. They're kind of like a Netflix or something. They deserve this high multiple because they're such high growth. I bought them at half that valuation, where I'm up 120% on them. So I bought them at a much lower valuation. I'd 100% put Reddit on the watch list, but I don't know if I'd buy them over 200. Under 200 would be good. Let's see what the earnings have to say. So advertising revenue surged. User metrics showed strong. Daily active users increased 19%. Weekly active users reached 444 million, boosted by international expansion. So what is that? Boosted by international expansion. Reddit with AI just integrated these translation tools. Where I don't know if you're someone who wants to learn about American football or something, you can go on Reddit and now you can translate what everyone's saying and stuff or whatever. But anyway, the profits are real. The growth is real. If we go to the revenue's up 67%. After grew 67. After grew 21. So they're on a streak of growth, and not just growth, but net income. Oh, and a fortress freaking balance sheet. Literally no debt whatsoever. Completely no debt. Oh yeah, hey Mo, if you want to get this app, it's in the link tree in my bio, very first link there. But yeah, literally debt free. Completely debt free company. And They're actually making interest on their cash as well. But yeah, anyway, I love Reddit. They're super profitable now. They're hopefully going to be making like 100 mil in net income a quarter now. Plus, easily. Their ARPU, their average revenue per user, is up like 48% year over year. So they're making 48% more money per user than they were at the same time last year. That's why they've had such a monster rally. Analysts didn't expect that. They've also, someone said this, or actually, I thought, they've been getting money in deals from Gemini and OpenAI to like train their LLMs using Reddit's data and stuff like that because it's valuable. Okay, let's see. IGG.L. Yeah, so look at this. IGGL. I can't find this ticker symbol. If you give me the name of the company, though, so yeah, it's a British pound company. Normally they have a different ticker symbol, like 10 cent or something, where you are able to buy it on here. So if you give me the name of that company, I'll type it in, Brian. I bet there is a ticker symbol available for it. Okay. Oh, here's another weird ticker symbol, TTNDY. What's this one? So, actually, they're on my watch list. What is this company? Tektronic Industries. Okay. So they're an ADR, of course. Let's see what they do. Power equipment business, that's in demand right now. North America is 75% of the revenue. So even though they're an ADR, most of the revenue does come from the US. But pretty nice there. The growth on the net income for the full year 2024 was 1.12 bill. You get a dividend. So they are headquartered in China, but I forget is this maybe the company that owns Ryobi? Or maybe it's, so they own Milwaukee. Oh, and Ryobi, dude. They have this is why I just wanted to watch this. I live actually pretty far, but the Ryobi factory is like massive, dude. Their stuff is all over here. But anyway, they own kind of these like Milwaukee tools, kind of all these brands and stuff like that. So yeah, let's go check this out right here. So yeah, power equipment, that makes more sense. Anyway, pretty cool name there. Cat is killing it. Yeah, dude, Caterpillar, this is the kind of stock that's probably just going to continue to climb higher as well. If I own Caterpillar stock, I wouldn't even take profit on this one. It's probably the kind of stock that's just going to continue higher. The PE is a 26 after growing so much, and you get a 1% dividend on them. They're pretty great. MasterCard. You know what? Let's do MasterCard right here. So MasterCard, that's not, actually, I thought Nancy Pelosi owned one. Nancy Pelosi owns Visa. But, Visa and MasterCard, they're a shared duopoly where, all those little micro credit card transaction fees that are slowly bankrupting us are making Visa a lot of money. Like, whenever you go spend anything at Walmart, like $100 at Walmart, and you use your Visa card, they keep 3% of that. Which is kind of crazy. But anyway, we're at Visa right here. We got to get to MasterCard. I'm on the completely wrong right here. So here's MasterCard right here. If you go to the revenue, what's cool is 70% of the revenue is actually outside of the United States. It's less US exposed than Visa. But yeah, 70% of the revenue is other countries. US is 30%. But yeah, check out the net income they print. I mean, they're easily doing 3 to 4 billion of after-tax net income a quarter. So what are they doing with 3 to 4 billion in net income a quarter? Well, check this out. If you look at the top here, they're spending 2 to 3 billion on share buybacks every single quarter. It's such a shareholder-friendly stock. And on top of doing the share buybacks, the dividend costs 680 million a quarter. So they can easily afford to raise their dividend, 680 mil a quarter. They're doing basically 4 billion. So here's what share buybacks do for you. We go to the net income, it's up by 20.3. But the net income per share is up by 22.9. Can the EPS growth rate and the net income growth rate should always be the exact same? So that makes the EPS grow more, which makes the PE ratio go down. It also makes the cost of dividend go down, gives you more ownership in the company. So basically just forces the stock to go up. Kind of cool. Wynn. Wynn Resorts. This one, I don't love this one. Kind of like a fancy hotel kind of company. The stock has not done too well. Yeah, dang, wow. Wynn Resorts is the same price that it was in 2007. So you bought the stock in 2007. You're not doing too well. But yeah, Wynn Palace. Las Vegas operations. Yeah, I wonder how Vegas is doing. That looks like that's not doing too well. 2-1, -1. So low single-digit growth right now. Wynn Macau. Or wait, what's the analyst expectation? So wow, they actually had a good beat on revenue. They beat by a good bit on revenue. They missed on net income, and they beat on EBITDA slightly. So I'd rather own honestly, I'd rather own a Hilton Hotels. That would be like a much, 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 much better play. Yeah, I'm not really loving Wynn. Those numbers aren't too great there. But yeah, Hilton Worldwide, this is really a royalty company. I love Hilton. They buy back 5% of the shares every year, no matter what. I should not have sold Hilton for a profit. I'm so mad. Okay. Um, let's see here. Brother, I had a good play with Symbiotic. Heck yeah, Swordfish. Yeah, Symbiotic. They're at an all-time high right now. So super congrats if you own them. Sibaby said RKLB. Yeah, this is probably my favorite space stock out there. Still crazy over. Well, I still, even after falling a good chunk, I still wouldn't pay their current price. But here's why this company certainly deserves some sort of high valuation. Yeah, 40 times sales. So not even like 40 times PE, but 40 times their revenue is so expensive. But check this out. If you go to their space systems revenue, this is my favorite space stock. I've looked at ASTS, Lunar, all of them. I really feel like Rocket Lab is the best one. They have the best growth. Revenue's up 36%. After grew 81%, like after grew 50, like they're on a streak of growth. It's a record over 100 million for the first time ever. It's never been over 100 mil before. And they also have their launch services right here. Launch services is up 95% year over year. Great growth. Let's see if there's any new news. I know they have deals with like NASA, and Rocket Lab secures first dedicated launch contract from JAXA for Rise 4 mission. That's the Japanese NASA Rocket Lab. Okay. Anywho, they also are doing acquisitions. Like they just acquired Geos this quarter, which that's another reason why their assets bumped up a bit. But yeah, I do like Rocket Lab, but I really would not have that as a meaningful size position. They're not expected to get profitable anytime soon. They burn through a lot of. Cousin said Adobe stock. Yo, Adobe, let's check them out. So this is, I'm on an Adobe product near every day with Photoshop, After Effects. So hey, subscribe to my YouTube channel if you want. But don't tell Adobe though. I have the hacked version of Photoshop. Don't tell them that though, but they're really getting hurt by the AI thesis right now. Basically, I know someone who just made an incredible logo in ChatGPT for free that doesn't even look AI generated, like Gemini as well, where maybe in 10 years from now, we won't need Adobe products, or we'll need it, but just way less. So that's what's kind of being hurt. And like the valuation is super fair right now, 19 PE. And the numbers aren't bad yet. They're still have good numbers. Revenue's up double digits every quarter. They're printing net income easily, 1.7 billion net income a quarter. It's after they paid 400 mil of taxes. So they're printing net income 1.7 billion a quarter. But there's a lot of increased competition as well from like Figma. They actually tried to acquire Figma, weren't able to, had to pay them $1 billion. Then Figma went public, which is funny. But yeah, Adobe right now, they're plowing money in share buybacks. If you look at the top here, they're doing 2 to 3 billion buybacks a quarter, which is just nuts. They've bought back so much of the company this past year. So look at the net income. It's up by 5.2, but the net income per share is up by 11. They've bought back over 5% of all the shares in the past year. So honestly, I always think humans are going to need the final touch on art. Like, I don't know if we'll fully AI it, but I nibble on Adobe. I really wouldn't have Adobe as a meaningful size position. Like, I really wouldn't, but maybe I nibble on them. Maybe buy one share or something. Just, they are cheap, and I do like them. I do like their products. It's called IG Group, a London-based brokerages. IG, oh, here it is. Yeah, we found it. So really low volume on this. So yeah, 5, maybe it's just because it's an ADR, but yeah, British company. So yeah, you can trade this one. So yeah, it looks like you are able to buy this one. So yeah, this is the over-the-counter derivatives. Yeah, exchange traded derivatives. So yeah, this is the stock right here. There you go. Pretty cool. Let's see net income. Yeah, so this is in USD. We've converted it from British pounds, or they made 500 million for the fiscal year 2025. Not too shabby. Thoughts on CRISPR? Hey, Swordfish. Let's see here. Adobe is transitioning into a data hoarder, spyware stuff. Oh, hey. That's why some people don't like Meta and stuff. We haven't really looked at NVIDIA. We can look at NVIDIA real quick. So NVIDIA, they got smacked last week from the realization of Google stole their market share. Google basically... And let me start it from this. Basically, companies are buying a bunch of NVIDIA GPUs to train up their own in-house LLMs, their own language learning models, or just LLMs, whatever. But basically, like OpenAI has spent so much money on NVIDIA chips to make ChatGPT. Well, Google just came out with Gemini 3.0. It's literally better than ChatGPT's best version. It's the best, most successful LLM of all time. And they created it solely and trained it solely on Google's TPUs. They didn't need to pay the NVIDIA 55% CUDA tax. So they basically are, maybe, we don't know this for sure yet, but that is why NVIDIA has been struggling. I think the past week, because Meta's even, as soon as that news came out, Meta also plans on spending billions on Google's TPUs. So maybe in the future, NVIDIA's GPUs won't be in so much demand, but that's all short-term noise. I mean, their right now numbers are phenomenal. NVIDIA is now cheaper than Walmart. Walmart's a more expensive valuation. I mean, the NVIDIA's like a 28 times next year's net income. I mean, that's cheaper than, but even the right now multiple. What happens is, hey, again, if you want to get this app I'm on, it's actually a brokerage software. They send you a tax form and stuff. It's actually brokerage. Link tree in my bio, very first link there. My favorite brokerage. But yeah, NVIDIA also, let's see right here. They also have some other businesses like their automotive software. It's actually like a Tesla competitor. They have a crazy GPU market share as well. But yeah, anyway, I do like NVIDIA. $32 billion in net income after they paid $4 billion of taxes. They have 55% net margins. The law of large numbers is hurting NVIDIA a bit as well. They're worth $4.3 trillion. For you to double your money, they have to be worth $8.8 trillion, $8.6 trillion. So the law of large numbers is hurting them a bit. But another thing is how NVIDIA's numbers right now might be propped up on circular money. So if you didn't know, NVIDIA owns a stake in a ton of different companies. If we go to the NVIDIA portfolio, NVIDIA is so big that they own a bunch of CoreWeave, APLD, Nebius. The reason NVIDIA is handing money over to CoreWeave, APLD, and Nebius is because whenever they give them money, literally 80-90% of that money is going to be spent literally just back on NVIDIA chips. Yo, watch out for that guy in chat here. You know what? I can copy his paste and username to my friend, and that guy will be fully banned off TikTok. Don't worry. If you guys ever look at the chat here and you see a guy saying, first 5 people to DM me get all this free money. Yeah, watch out for people impersonating me. I'll never follow you, DM you, nothing like that. And actually, I'm copying his username right now. He will be fully banned off TikTok soon. This is awesome. Okay, let's keep going here. Oopsie. Turn off my phone to do that. Okay. But yeah, anyway, I love NVIDIA. CoreWeave, APLD, and Nebius, these are all kind of the same thing, though. They're all a bunch of companies that just own a bunch of NVIDIA GPUs in data centers. Nothing really proprietary about these names. I love ARM. Dude, ARM, this is a royalty company. Royalty and licensing company with literally like 100% margin or gross margins. Look at this. Their gross margins is a 97%. This company solely just collects royalties. It's insane. I love ARM. So yeah, anyway, NVIDIA as well, they also taken a stake into WeRide or whatever that one Chinese company was so they can buy NVIDIA chips. Okay, RR, yeah, hey, this is actually, we're not going to cover them. Sorry, Rand, we've already looked at them a few times today, and it's complete junk. Please stay away from Rich Tech Robotics. It's a complete momentum. It's you buy this solely and purely for momentum. There's no fundamentals. They have no IP, no patents. This is a terrible robotics play, but it follows the robotics momentum. But yeah, the revenue is $1 million, down 18%. Yeah, but honestly, I've been talking about this for a long time. If anyone's ever asked about robotic stocks for the past year, probably on my stream, I always point people to Symbiotic as the better robotics play. And I'm glad I have, because this stock just hit an all-time high. This is the best robotics play right behind Amazon. And I've always been saying that for years, for a year. Like, I really love Symbiotic and Amazon as the way better robotics plays. Teradyne TER is also maybe a third favorite. I'm still looking, but they have a pretty cool robotics division. I used to think UiPath was a good robotics play, but no, complete junk. Well, not complete junk, but okay. I feel so bad. Yeah. Do you have Netflix stock? I actually do not own Netflix stock. Ooh, yo, Rand, I don't know if you told me this one a long time ago, but I wish I bought this stock. This is Glue Therapeutics, and I'm not sure exactly this is like the only publicly traded version of, like, I'm so gonna mess up what they do, but they like can glue together like genetics, or I really don't know exactly, but it's like they call themselves Glue because they like glue stuff together in biotech. Their presentation was so cool, and they have real revenue. They have real revenue now, and I'm actually looking to buy this one. They're on my watch list. And again, super small company. I would never really trust a lot of money with them. They just hit $1 billion market cap, but They have real revenue, like 85 million this quarter in Q1. That's like their best quarter. Actually, well, hold on now. Well, I don't know. It says the revenue is supposed to fall to 6 million in 2 quarters. I got to do more research on this one, but from when I looked at their investor presentation and stuff, it seemed like a fascinating company. But actually, I don't know. That actually, then I don't think that was real sales. I don't think the sales were actually 85 million in that quarter. And if that's the but it says they made 44 mil of net income. Yeah, if you go to net income, it says they made 46 mil of net income on that. So they really did make net income after paying 20 mil of taxes. So I don't know, but I guess that's not reoccurring. Like they're not expecting that again. I don't know. They've had a monster rally though. ENVA approved. Wait, ENVA, Enova approved a 400 million buyback. So hey, yeah, I love companies that do buybacks. Yeah, this company, wow. So a $400 million buyback, that's over 10% of all the company. Look at that. The whole company's worth $3 billion. 400 mil, it's 10% or more than 10% of the company. So actually, this stock might just continue to climb higher. The valuation's fair. Go consumer loans and financing, consumer business loan or business loans. Yeah, they're making like easily. They made 300 mil plus in net income this year already. So that's like just 1 year of their net income to buybacks, and buy back 10% of all the shares for 1 year of net income. Not too shabby. Even all the stocks at an all-time high, actually, they're really cool. They're probably just going to continue to climb higher. A lot of the fintech names are so cheap right now, like a Sezzle, a Dave. They're really cheap right now. Hey, what up, Ronnie Fireball? Good to see you, homie. DB Ronan, good to see you. PANW, yo, this is my favorite cybersecurity play. I mean, right behind CrowdStrike. I mean, actually, if you go to Nancy Pelosi's portfolio, she also owns Palo Alto Networks. Now, the valuation's still high, way too high for me to buy. They're trading at 89 times next year's net income. But they're at the top of my watch just because I want cybersecurity exposure. It's the one part of software that's not getting hurt by the AI thesis. Like Adobe, Salesforce are all getting crushed. But cybersecurity, as AI gets better, hackers will utilize that, get better at it. So anyway, cybersecurity will always be in demand, and I think more demand than probably ever before in the next coming years. But this is a subscription model play. Over half of the S&P 500 are customers, and the growth is just insane. I love this. The annual revenue, new record every year, every quarter. And they print net income. They're making a couple $100 million net income every year, every quarter. Same with free cash flow. So it's like the most profitable cybersecurity play out there with like the second biggest market share, I think. So I love Palo Alto Networks. It's still, the valuation's still too high though. NWL now at the price of 1985. So yeah, the Newell brands, they own some random stuff. Like think of like Crayola and like Elmer's glue. Super like or home and commercial solutions. Actually, I remember this was a play. I remember people buying call options on this stock when Slime. I remember when like probably that was 2021 or something, but Slime was super popular, whatever. This was like people were buying calls on this to benefit from people buying Elmer's glue and stuff like that. So not really one I love. Yeah, Rubbermaid, Yankee Candle. Let's see out the dividend. I hope they don't pay a dividend so here's the thing. Their dividend has been cut massively. They have a 7.6% dividend, and the dividend has been cut massively too. So 7.6% dividend, do they make net income? It's so choppy. I mean, it's hard to really trust this name. I can see why the stock is, the same price that it was in 1997. Check out actually, let me show you that right here. If we scroll on the monthly, all-time low on Newell Brands. All-time low. It's never been lower than it was on Friday. Even in 1997, it's way lower than it was in 1997. But yeah, look at the revenue. The sales, the lifeblood of the company. The revenue's down 7.3 after it fell 5, after it fell 9. Look at just all red numbers. It's -7, after -5, after -9, after -19. So anyway, wouldn't own that one. Someone said, why are you ignoring me? Hey, White T, I'm looking at the chat and I can see you have never sent a comment before today. And I'm looking and I have the thing. So I don't know what you're talking about. But what's up? If you got a stock you want to look at, let me know there. Still like Innodata in the low 50s. Ooh, hey, good to see you, William. Yeah, Innodata, I still think is a bit too high of a valuation to buy. yet, but I love this company. They print net income, beating on every analyst expectation. They have the best customers. I think Meta, or it's either Meta or Google, is their largest customer. They also have this new federal contract division that'll going to be like 25 mil of future revenue. But yeah, they're a data labeling company. I'll check out the analyst expectations down here. That's the orange line. Every quarter they beat on. Well, look at that. They beat on EBITDA. Look at the EPS. EPS is just net income per share, but net income, they expected 13 cents. They did 24. Look at the growth. The revenue is supposed to be 72 mil in 2 quarters. They have a 55 PE. It's still too high for me, but they have this 55 PE. They just got profitable. So I'm really curious to see what will happen with Innodata. I am a shareholder. And again, as much as I love them, I wouldn't have it as a crazy big size position. If we go to our Roth IRA right here, I do own only 9 shares in them. It's a $500 position. And I only originally put $300 into them. It just appreciated $200. So I really wouldn't have, especially at over $50, I wouldn't own anything meaningful in Innodata, but I love that company. Amazon, Nvidia, Google, Meta, they're all customers. No, I should show their balance sheets. I love their balance sheet. Okay, CEG. Hey, what up, dude? CEG, this is my favorite nuclear play out there. My favorite utility. It's a utility play, AI play. So basically, this company owns 30% plus of all the US's nuclear reactors. There is no close second. This is the largest play for nuclear energy. They pay dividends, they do share buybacks and synergistic M&A to the point where they just bought Calpine, and after buying that company, it's literally accretive 50 cents of EPS a quarter for the rest of time. I can't. That's more than the cost of their dividend. They basically just got their dividend, the lifetime of their dividend paid for free because of this acquisition. Like, I can't believe how good their acquisition was. And literally on that news, the stock gapped up like 23% that day they announced that acquisition. I don't know how they agreed to it. But anyway, CG, my favorite unregulated utility, nuclear play, and natural gas play. Actually, right now in my house, our natural gas utility bill is through CEG, Constellation Energy. And what CEG has been saying is companies want the reliable, clean energy of nuclear, but there's a small downtime for nuclear because they have to remove the fuel and all that. So there's downtime, like their uptime is 98%. So they're down like 3% of the time, but they have natural gas as the backup. They want the combination of nuclear and natural gas. Okay. Do you study ETFs like EWW? I don't really, but we can check it out though. Or iShares MSCI Mexico ETF. Let's check out what the Mexico ETF is hold of. So probably just the top Mexican companies that I've probably never heard of before. Wait, Walmart D Mexico? I didn't know about that. Or anyway, looks like a bunch of Mexico stocks. Basically, you buy this ETF to bet on Mexico, I guess. What's this other one? EWI? This is Italy. So yeah, these are like, that's kind of cool. You get like all the Italy stocks just via this ETF, and you don't have to pay any weird like, I own Ferrari. Heck yeah, I'm a Ferrari shareholder. But you can basically own all these names without having to own all the weird, I don't know, Mexico companies with weird tax forms. I don't know. Let's see here. Hey, what up, Ronnie? Zim it too. Yeah, Zim, that's your shipping company. I wonder if that's true. Wait, what is Zim's current PE? So it says the PE on Zim is a 2.4. Well, let's see. If we go to their net income down here, because let's see if that's real. So it looks like they made 1.1 billion that quarter. So yeah, so look at this. You really want to look at the forward expectations because look at the EPS projections. It was it's supposed to go negative the next 2 quarters. Beware as a Zim shareholder. So, that's like a super important thing to know. Most investors are like, dude, this company's so chilling. They trade at 2.5 times net income. Well, the net income is supposed to go super negative the next 2 quarters. 68 cents negative, 75 cents negative. The EBITDA is supposed to basically go to 0. I don't know about that. The Zim is a supply chain logistics kind of beneficiary. What app is this? Yeah, hey, what up, bum? Hey, this is actually a brokerage right here if you want to get it. It's in the link tree in my bio. Very first link there, broker called Moomoo. It is an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get some free stocks. It's pretty cool. And it's free, costs nothing, no commissions. My favorite one to do analysis on. And a lot of people just like it for their idle cash. If you look in the middle of my screen, I have $50 of cash. It earns you at 3.6% APY. and no fees or anything. Okay. CRMD, yo, actually, I gotta go in 5 minutes, but let's cover actually like 3 minutes. Dang, we've been live for 2 hours and 30 minutes. Yo, we're probably gonna do another live stream later today. If y'all want to hit the follow button, we stream every single day, sometimes twice a day. I literally sell nothing. I have no course, book, WhatsApp, Telegram. Oh, I forgot to get to Sezzle too. I wanted to get to Sezzle, but I literally have to go in 3 minutes. But yeah, CRMD is one I do own, and as much as I love them, and I really love this company, I only have them as a $700 position, and I would never really consider making it as a more position than that. They are so risky, but I love the risk to reward on this one. I think they own this prescription called Def and Cath, and it's been explosive, the growth. 88 million of revenue this quarter, and the profits on that were 50 million. You know, they print net income. They're going to be doing like 200 million net income a year, and the whole company is worth 770 million. So they really do trade at 4 times net income, and we can see they trade at 3.3 times next year's net income. They're just such a cheap company. I just love their financials. I love the growth. I don't know. There's a lot of risk there. Like they lose their exclusivity for that thing in like 2032. Most of their sales are concentrated from one like hospital group. There's a lot of like bad news, but I like the risk reward on them. And as much as I love it, I only put a couple $100 on them. So yeah, I'm going to go ahead and, I got to go here, but, ETFs are good for finding stocks in your watch list. Yo, actually, I have a cool little set of stocks I recommend. If you look at ticker symbol SGI today, I forgot what ETF I was looking at, but I found this via an ETF, SGI. If you go to the very beginning of the stream, I go over the 2 stocks I was talking about. Somni Group is one of them. They own Mattress Firm, and they just acquired Mattress Firm, and kind of a money laundering player or something. I think they're changing their royalty franchise structure. So anyway, I think the franchise owners of mattress firms can pay that or what. That stock's out at all time high. Very weird. I'm going to do some more research on Mattress Firm, but the other one is CVCO, Cavco, small manufactured home kind of play. But anyway, I got to go. Hope you guys have a great rest of your day. If you want to hit the follow button, we stream every single day. We might be live later tonight. Please watch out for people impersonating me. If you hit the follow button, I really appreciate you. Please hit the like button, hit the follow button, but you might get followed by someone impersonating me. That's not me. I'll never, not in a mean way, but I'll never follow you, DM you. I literally sell nothing, no course, book, WhatsApp. I'll never follow you, or I'll never message you about some weird thing and nothing like that. Because people were asking me, like, I got a couple people asking, like, hey, was that you that just DM me and followed me? I'm like, sorry, that was not me. Please watch out. So anyway, have a great rest of your day. See you all very soon. Oh, I wanted to say something to the TikTok stream. Anyway, I was going to say, please go subscribe to my YouTube channel. Well, hey, if you're on the YouTube stream, please hit the subscribe button. I'm trying to build on my YouTube channel. I barely get any viewers on YouTube versus TikTok. So, hey, thank you all for everyone on the YouTube stream. I always read your chats first. If you haven't hit the like button, please hit the like button before you go. But see you all very soon. Thanks again for everyone on here. Brian Paul, the member, thank you so much. Shout out to the member Brian and Jeff Mack and Swordfish